This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone, on a Thursday, Claims Thursday. We do that at 8:30 today. It's been a snooze the last couple months. Yeah. But the markets are not a snooze. Paul Sweeney, back in the saddle, and Tom Keene. Welcome all on economics, finance, investment. A great set of eclectic guests here across all of the tensions that are out there, Paul. What'd you learn at the Bloomberg NEF conference about the tensions out there?
I tell you what, Tom, the energy industry they're all in on going to this green, more energy economy, if you will. The money coming out of the U.S. government for green energy is just extraordinary. So it is certainly a public-private partnership. We'll see how it plays out.
Did you jaw drop Brent down from $90 a barrel to $86.37? You single-handedly do that?
I know, but my gasoline prices at the pump down at the Jersey Shore are still high. So we'll check in with John Tucker maybe a little bit later on that, Tom.
We'll see what's going on in hydrocarbons. Of course, futures up 12. We're going to get to that with Lisa Mateo here in a moment. We're out on Apple CarPlay. We're on YouTube. YouTube is just exploding. I was caught unawares by this.
I know, it's internet.
It's like a new thing.
That's what the kids are doing.
You search, well, the older people are too. Thank you, older people out there. Bloomberg Podcast, search it, and you will find us out there on YouTube. Look for Lisa Mateo.
Yep.
That's the easiest
way to do it.
To get to us. We're in the Interactive Broker Studios. We need a data check with our Bloomberg Business Flash. Here's Lisa Mateo.
You got it. And futures are advancing. And this is after Wall Street extended what is now the S&P 500's longest streak of losses since the beginning of the year. Now, the decline come as the Fed's Loretta Mester said policymakers, they can hold rates steady and that the central bank shouldn't be in a hurry to cut interest rates. Now, yesterday, the Fed's Beige Book, I know Tom was reading it cover to cover, it showed that America's economy had slight gains since February. Consumers remain very sensitive to inflation. So right now we have NASDAQ futures up 0.3%, Dow S&P futures up about 0.2%. The 2-year yield, 4.93%. That's little change. The 10-year yield at 4.58%, and that is down about 1 basis point. To commodities, spot gold higher at 2,383 an ounce. But over at oil, we have Brent crude, $86 a barrel, NYMEX crude, $81 a barrel. Want to point out Bitcoin, they're at 62,000. To earnings we go. Taiwan Semiconductor Manufacturing. Outlook beat estimates. AI demand's fueling its business. The ADRs, though, they're down nearly 2% right now. And we'll stick with chips. We'll go to Micron. They're up more than 1%. Sources say it's set to get $6.1 billion in CHIPS Act grants next week. And that's to help pay for those domestic factory projects. And Microsoft up 0.2%. Business Insider reporting the company plans to accumulate 1.8 million AI chips by the end of this year, primarily from NVIDIA. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Biggest news of the day. We saw it 4 or 5 days ago. Taiwan Semiconductor came out with a tease, and they delivered today. And actually, I read every single word of it. I thought it was just, within the gloom that's out there, it's like what Gina Martin Adams is saying. I'm sorry, business is getting done.
Business is getting done. And on the chip side, I mean, that is the way to play, at least initially, Tom, the AI play. So people focusing on the chips.
We start strong today. We hate her. Amanda Lynam with us, with Blackrock. Nice to see her. She shows up with a 40-page deck.
I know. I'm looking at it.
Okay, and she got that evil eye. If you don't at least get to page 35, I'm not talking to you. On your 40-page deck, the one chart that I really like, Amanda Lynam, this is on the linkage here of interest rates into equities, bonds, currencies, commodities. You talk about dispersion. What's dispersion, and why should our audience care about it?
Sure. Well, first of all, thank you so much for having me.
Page 32.
Dispersion is really that things are really happening under the surface despite what may seem to be optical, low vol, tight spread levels, which is a complaint that we hear a lot from market observers. Under the surface, even though, for example, high yield spreads are optically tight, there are participating parts like high quality, low duration sectors of the market, and then there are areas that are lagging, like triple C is low quality.
If Ed Hyman comes in yesterday and says his number one issue is BAA spreads, show nirvana.
Yes.
You're suggesting underneath.
There's actually more to the story, and
What's
it's
the
not
story? Well, tell us what
not
more
a
the story
rising
is.
tide lifts all boats. I think if I were to distill it down, Tom, it would say the market is efficient in that it's recognizing that there are some companies that were kept afloat by a super low rate environment, and they will not be able to manage through a high for longer cost of capital environment, something that we've been discussing for a while. I think you also see it just broadly. There's a lot of talk of monetary policy is restrictive. Yes, that's true in certain parts of credit, certain parts of commercial real estate, for example. But in general, the economy has been quite resilient. And actually, we're seeing that bifurcation play out through credit.
I mean, I keep telling Tom he's got to take more credit risk, but he says he can sit there in a 2-year treasury, 4.92%.
Yeah.
That's not a bad trade.
So actually, we think there's a tactical case for allocating to floating rate credit, short duration credit, to really pick up on that carry and income component. So I would agree with that. I think given the signaling that we've had from central banks, what we're seeing is that we're not expecting rate cuts in the early part of the second half. We had previously been guiding to cuts coming in the second half with risk skewed earlier. We no longer see that. I think the risks are more balanced. And then similarly, if you expect this kind of transatlantic divergence where it looks like the ECB is poised to cut in June, the Fed will stay on hold. It actually does lend itself to a tactical allocation to floating rate credit.
Is there a scenario, and you guys at BlackRock think that maybe they don't cut in 2024?
I don't think we can rule it out.
Okay.
I think the signaling from the chair, the vice chair, New York Fed President Williams, all even in the past few days, has shown us that this is going to take longer than expected. I do think it is important that they get cuts started in 2024, not because a 25 or 50 basis point reduction in rates is game-changing for the live-fin market, but rather I think uncertainty around monetary policy is not something that the credit market needs right now. And so if they do not cut and we start to talk more about the potential for hikes, I think that's problematic for risk sentiment.
INGO, that's the Bloomberg Index browser. When I looked at fixed income space, I got all red this year, even the high yield, which had been a pretty good performer. What do I do here? I mean, how do I make money in fixed income these days?
The one part of credit that is positive is leverage loans,
okay,
because of the floating rate. So again, it goes back to that point that if you're thinking about tactical asset allocation, one of the areas that actually we think is supported in this environment is floating rate exposures. You could do that a bunch of different ways, right? You could do that in the IG market, leverage loans, right, CLOs, private debt even. And I think that, to your point, that's exactly where that dispersion comes in, Tom. Within credit, it's not all created equal.
Our audience is not going to go out. They're not on the phone at 9 a.m. going, geez, I think I need a leveraged loan. In the real world of people who are saying, I'm not going to play in the market, I'm not buying NVIDIA, blah, blah, blah. They're saying, I want the comfort of a coupon and maybe I'll make a total return. I'm looking at the logarithmic Bloomberg total return chart, the Lehman index. I'm thrilled that, Mike Bloomberg and Tom Secunda stepped up to give us this wonderful, wonderful index. I'm eyeballing it, folks. At the minimum, I need a 10% gain to get back to trend on that index after the carnage of the last 3 years. When do we get that good feeling back in your world?
I think banking on a rally in long end rates is not something that's in our base case at the moment for a host of reasons, including the deficit.
So where do you choose duration then, if you've got that weight?
Yeah. So I think towards the front end belly of the curve is probably where you want to be. The curve is still inverted, right? Yep. So you are picking up that extra income and carry by tilting more towards the front and belly as opposed to the long end. The one point, Tom, that I think is really important for our listeners to think about as well is that the all-in yield component right now is screening very attractive historically, even while spreads are tight.
When you say near the belly, give us
5-7 year.
Well, Lisa's got to apply some money. She saved so money at Costco last weekend. She's looking 3-year or 5-year.
Yes. So I would say anywhere between 3 and 7 is where we would want to focus. But from the perspective of all-in yields, deploying capital now, we see a pretty attractive opportunity to do so. But you're right, Tom. The past 2 years have not been favorable for long end duration.
If I want to take some credit risk, are there certain sectors you guys like?
So I
versus
do
others?
think as we're thinking about the potential for geopolitical risks to escalate, sector and issuer selection will be really important. So on the sector side, are you a commodity purchaser or are you a commodity producer? Commodity producers are likely to fare better in this environment to the extent that we get commodity disruptions, right? And we still like financials. And then I would also say on the issuer side, pay really close attention to supply chain resilience, balance sheet resilience.
Okay.
Can you navigate a high for longer?
Asking for a friend on issuance.
Yes.
We're in a quiet period. I get that. Maybe you can't even answer this question. Are we going to get big tech issue bonds? They've got an absurdly low bond component. Are they going to get religion in this cycle, this dispersion that we're in now, and issue mega gajillions of fixed income debt?
So a couple things. One is we are in a quiet period, but it's picking up a little bit with financials. I think in general, IG corporates are in a unique position, specifically cash-rich sectors like tech and pharma, where they can actually earn a pretty good interest income, and that is above and beyond the cost of debt in many instances. And so I think to the extent you expect M&A to pick up, shareholder returns, general corporate purposes, yes, we do expect that.
That's in the deck.
Can the deck, can
It's
you
in the
bring
deck.
a 60-page deck next time? Please, I'm begging.
I'll give you the summary anytime, Tom. You don't have to read the whole thing.
No, I like the 60. I don't need the executive summary. I want the Lynam 60-page deck. Amanda Lynam of Blackrock, just always fabulous. Futures up 12. With our news in New York City, John Tucker.
All right, thanks, Tom. President Biden talking tougher about China as he highlights the challenges to its economy.
They've got a population that is more people in retirement than working. They're not importing any. They're not bringing. They're xenophobic. Nobody else coming in. They've got real problems. I'm not looking for a fight with China. I'm looking for competition, but fair competition.
The president's latest rhetoric coming 2 weeks after his latest phone call with Chinese President Xi Jinping. The hush money trial against Donald Trump resumes in New York this morning. Jury selection continues in the first ever criminal case against a former president. Let's get more in this report from Bloomberg's June Grasso.
The trial judge has set aside 2 weeks for jury selection, but that much time may not be needed. 7 jurors were sworn in on Tuesday, so that means 5 more jurors and 6 alternates still need to be selected. The jurors who survived the grilling by lawyers are an information technology worker, an English teacher, an oncology nurse, a sales professional, a software engineer, and, in a bit of a surprise, 2 lawyers. In New York, June Grasso, Bloomberg Radio.
Well, Donald Trump's campaign wants other Republicans to pay up if they use the former president's name, image, or likenesses in their fundraising solicitation. In a new campaign memo obtained by Bloomberg News, all candidates and committees who use Trump in their fundraising appeals must give a minimum of 5% of the money they raise to the Trump political organization. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Paul, and Lisa.
John Tucker, thanks so much. Futures up 11. The VIX comes in. Saxauer nailed it.
I know.
You were off, at some fancy place.
Exactly.
How good was breakfast? Be honest.
Oh, it's fantastic.
Yeah, thank you. It's good to know. I'm glad to know that your breakfast was good.
Yes.
I had a bag of Cheez-Its. But the fact of the matter is we're at a VIX of 19 and we come in 18.01 with even a 17 level. Markets are healing.
They're healing.
Off of what we saw Monday
that's
and
okay.
Tuesday.
We've been talking about some of these pullbacks, Tom, and what do you want to see? 2, 3, 4, 5, 7% pullback.
Yeah.
We just haven't necessarily seen it here, so we've got futures looking a little bit higher here today.
Looked at a copper chart, higher to say the least. We got to do some more on copper here as well. Brent crude 86.39, West Texas 81.86, both down about 1%. We are knee deep in the beginning of earnings season. Taiwan Semiconductor out today with some very sprightly statistics, and we'll bring much more of that to you. From New York City on YouTube, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Lift to the markets after stocks fell for a fourth straight day yesterday. Right now we have NASDAQ futures, Dow futures, and S&P futures all up about 0.2%. We have more economic data on tap for today. Initial jobless claims for last week and also March existing home sales. Over to the bond market, we have the 2-year yield at 4.93%. That's little change. The 10-year yield at 4.58%, and that is little changed. To earnings we go. Alaska Air rebounding from its Boeing MAX woes. Those shares are up about 1%. They expect second quarter profit to top estimates. Boeing, they're down about 0.5%. Discover Financial Services are up 2%, posted a sharp drop in first quarter profit. It worked to address compliance and also risk management deficiencies. And Netflix are up 0.1%. It reports later this afternoon, but Bloomberg Intelligence saying subscriber growth may blow past estimates. We shall see. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciated. Tom Keene and Paul Sweeney, thank you for being with us on Apple CarPlay. That's building globally. 20 nations has it. Download the Bloomberg Business app. And on YouTube, I'm learning about this every day. I mean, they came to me and they said, let's blow up distribution.
Yep.
Good morning on Bloomberg 1130.
Sure.
In New York and in Washington, in Boston. But this YouTube thing, I'm just like sort of stunned, and every day I get more stunned.
Yep,
like,
exactly. More and more people.
Jay Hatfield's on YouTube. I mean, figure that out.
Then you know you're.
We welcome Jay Hatfield here. This is important. This is really important. It's like really clear notes. When you have a shingle out at Morgan Stanley, CIBC, Oppenheimer, and all the rest, you have a real experience of keeping a short, tight, a note tight, I should say, short and tight. I'm looking at one bullet point, which no one believes. Boston Properties, leading office REIT in the U.S. with upside. You're going into office-type real estate now?
Thanks, first of all, Tom and Paul, for having me on. Yes, so I think we've talked about it before on the show, but have a differentiated view of real estate, and that is simply that REITs are not buildings. So any particular building can be either great or terrible. Like we're sitting in an excellent building that's owned by Vornado. It's way in the money, but there's a building just 2 blocks away that I go to get my haircut that's horrible because it's a C building. But Boston Properties, all A+ buildings, and we are optimistic about the demand for leasing as we come out of this recession.
So how do you respond to Ken Griffin deciding to put something up to the moon at Park Avenue in 52nd, 53rd? I mean, this is I'm sorry, and okay, Mike didn't write this question for me, folks, but I'm sorry, it's a statement on New York City.
Well, we don't believe in the work from home strategy at all. When I started on Wall Street, we did something called live from office. So, our apartments were just glorified storage facilities. So what you're seeing in New York is really a resurgence, and these critical businesses like financial services, everybody's back to work. If you don't come back to work, you're going to be fired from home. So, but again, I would stick to the A+ properties in marquee gateway cities like New York City, Boston, even San Francisco eventually.
I mean, I know you guys have a bunch of ETFs at your firm. What's the smart trade you guys are doing these days? You're one of the smarter folks we talk to. What are you doing here today?
Well, if you look actually at the 2 largest positions, this would have been a better comment a week ago, by the way, but our 2 largest positions in ICAP, which is our large cap dividend fund, is Morgan Stanley and Goldman Sachs.
Oh, all in on Wall Street.
So again, they reported and they blew it out.
Yep.
And really we're avoiding regionals. Simple reason is that investment banking is correlated with the market. We're bullish on the market. But regional banks, or all banks, are pressured both by net interest margin, credit to some degree, and also balance sheet pressure. The investment banks typically don't have those big balance sheets. And Ted Pick even mentioned this. They actually, what most people don't appreciate is when you have strong underwriting, it feeds the entire business. So you get a lot more trading because when you do a deal, it starts trading back and forth.
No.
Yeah.
I didn't know that.
Yeah, and there's another scandalous thing is if you get allocated the deal, then your salesman calls and says, would you like to trade? And your answer is yes. Yeah, this does happen.
So, I mean, I just spent the past 2 days at a Bloomberg New Energy Finance Conference in Midtown this week. How do you think about energy in terms of investing in fossil fuels, which we all need today, but then this transition to maybe a greener energy grid? So what's your energy call here?
Well, I have the unique perspective of being, and this is not much of a distinction, the first ever renewables investment banker. Okay. So I was doing it 33 years ago. So what you learn by being involved so long is that renewables take longer than you think or would hope. So, I figured out 33 years ago working with Ballard Power that it's really tough to have these full transitions. And that's why we've thought for years that hybrids was the right transition. And renewables will grow, but they'll grow slowly because people don't realize it's very site specific. Wind only works in certain places, solar only works in certain places. So it's not really the long-term solution. What really needs to happen, which unfortunately has gone slowly, is you shut down all the coal and replace it with natural gas.
Buried in your nose. I love this. I mean, it's like I'm dealing with Mario Gabelli. Outback Steakhouse.
What?
Your long, I've never even heard of this. Bloomin' Brands, they own Outback Steakhouse.
Oh, yeah, the Bloomin' Onions.
Right.
Outback Steakhouse is Lisa, you were there this weekend?
The Bloomin' Onion.
What's a steak cost at Outback Steakhouse? $90? Tell me about your long beef.
Yes. Well, we do think small caps are attractive. So this is held by SCAP, our small cap fund. But Bloomin' Brands is extremely cheap stock. It trades at about 11 times earnings, and McDonald's is 25 times earnings. And you do have an activist that should be a catalyst for change. Their margins have been a little bit pressured, as you indicated, because we have cost of beef is rising. But a very cheap stock, and actually almost every stock we own has a great dividend yield, so it's almost a 4% dividend yield. I mean, all small caps are volatile and move around and are noisy.
I mean, I was media free for 2 days because Paul was off with Alex Steele on a junket. Disney, there's an activist was involved with Disney. I mean, what do you do with a media group?
We don't focus as much on Disney. We like that stock, though. We valued it. We come up with about a $120 target. So it's kind of acted that way. It runs up to 120 when there are activists involved and then pulls back. But the parks, I have 4 children. I've been about 1,000 times to the parks. So it's a great, phenomenal long-term franchise. And there's no doubt it's turning around, and particularly
Paul, I'm weakest at this. You nailed this. It's a theme park company with everything else.
Yeah, it is.
Mr. Hatfield's saying the same thing.
Exactly.
Sassauer's saying the same. Lisa, I got to get on the script.
Yeah.
I've never been.
Well, you need to get down there. You got to get gas up the Gulf Stream.
I've been to Anaheim with the little teacups going around, and you cry for an hour.
That's right.
As your cherub goes around in the little teacups, and then you go see Mickey and Minnie in the little hut, and you cry some more. That's like ancient history. Then you go see the Angels lose.
Right. Exactly. Real quick, Jay, preferred stock. We never talk about preferred stock here. Give us 30 seconds on preferred stock.
Well, it's actually in the same duration category as your prior guest was mentioning. It's about a duration of only 7 years. Very attractive securities issued by public companies. It's actually 2/3 of our assets, so we're really preferred stock managers. And we think there's a lot of upside. You really get equity upside because they're trading below par. They typically trade back to par when the market stabilizes. So we're bullish on preferred stocks.
This has been wonderful. Jay Hadfield, and he didn't bring a 40-page deck like Amanda Lynam.
No, thank goodness.
That's great. Jay Hadfield, thank you so much. With ICAP, Infrastructure Capital Management, really in some interesting stock. We don't do enough stock ideas. That's like a 10 a.m. thing.
Yeah, we kick into that with
It's
Alex
7:25. Do you do stock ideas? You do them with Jay Hadfield.
Right.
You don't do it with anybody else.
Right.
Those, I really like Bloomin' Brands.
Yeah. You got to go, Tom, and get the Bloomin' Onion. I'm telling you.
The Bloomin' Onion, really, in Boston Properties. Okay.
Yep.
We'll go with that. Futures up 13, Dow futures up 84. The VIX in under 18. This is a huge deal, 17.95. I'm going to call it a grind, a lift to the market into earnings season. Brent crude 90, 86.51, down $3, $4 from a couple days ago. Stay with us. On YouTube, search Bloomberg Podcast. Paul Sweeney and Tom Keene, it's Bloomberg Surveillance.
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got green on the screen after yesterday's sell-off, and that comes after the Fed's Loretta Mester said that the central bank should not be in a hurry to cut interest rates. So we have NASDAQ futures and Dow futures down up about 0.2%. Same for S&P futures right now. Over to the 2-year yield at 4.93%. That's little change. The 10-year yield at 4.58%, and that is little change as well. I want to point out commodities. Spot gold higher at $2,381 an ounce. Brent crude, $86 a barrel. NYMEX crude, $82 a barrel. We'll head over to tech, where AI demand boosting Taiwan semiconductor manufacturing's outlook. The chipmaker expects revenue to grow as much as 30% this quarter, and that's following its first profit rise in a year. Now, shares, they're down about 2%. Sticking with chips, we'll go to Micron, up more than 1%. Sources say it's getting $6.1 billion in CHIPS Act grants next week. And finally, Infosys reported net income for the fourth quarter that beat estimates. Its ADRs, down 2%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. This is the conversation of the day, folks, for Global Wall Street on the Greek letters. Here's what it comes down to. You go to your statistics class and you get the central limit theorem done. And then you sit there and their eyes start to glaze over when they get to the cross moments, including kurtosis. I've got some on my left foot. And then you get to where the dynamics of the Greek letters click in, like alpha, beta, gamma, delta, 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 delta. Amy Will Silverman understands this stuff and joins us this morning with RBC Capital Markets. Amy, I love this comment. Everybody is so long, they've got more to hedge. How are we protecting, insuring ourselves after the second leg of this mother of all bull markets?
Yeah, Tom, good morning. I think this is what it comes down to. Everyone's been asking me, look, what's different now? Why is your favorite word skew picking up? Why are folks looking at hedges? Why is VIX spiking? And I think it's really that simple. Folks are more long, right? They spent all this year chasing upside, chasing that right tail, getting their FOMO and MOMO on. And here we are. I think there's just simply more to hedge right now.
It's more to hedge right now, but what's the right tail look like? I know we've got left tail, Paul. Left tail's that angst out there.
Yep.
It's like, it's like the tension. All of a sudden, the left tail's starting to move. How do you protect against that?
Yeah, so I'd say two things. First, the right tail is definitely not gone. It's just waned. So the exuberance is still there. You look at a stock like NVIDIA, where that right tail was just so historic. You really, like in the whole history of NVIDIA, had never seen anything like it. That bid for call options, that's peaked in March, but it's still there. There's still call demand outweighing put demand. It's actually just this idea that the left tail's waking up. We've had geopolitical tensions before. We've had Middle East tensions before. We've had sticky CPI before. Why is it different now? The fact that the left tail is waking up, I think, just speaks to a global worry that's picking up as well.
So, Amy, if I'm one of those folks that says, boy, this S&P, it's rallied 25% off those October lows. I haven't seen earnings move, to a similar level, so I'm concerned about valuation, and I want to hedge here. Is it expensive for me to hedge this market right now?
It really isn't. And, I will tell you, this is a conversation that for the whole first part of this year, no one wanted to talk to me about. And those conversations are picking up. So you do have those folks who are saying, valuations look a little full. I'm a little concerned about earnings season. Can we hedge? I will tell you, hedging still looks historically pretty cheap. It's gone up this year, but when you look back 5 years, 10 years, it's still at historically pretty low levels because, again, people haven't been focused on it. They've been focused on that right tail, but actually the cost of protection in your portfolio is really quite attractive still.
What do you tell people that are, I guess, maybe call you and say, hey, what is this Federal Reserve going to do? I just have no sense here. The data comes in pretty strong, the economy looks pretty strong. Maybe this Fed is not going to cut it all this year. What do you tell them as you think about where we're going to go over the next maybe 6 to 9 months?
It's amazing. I had an associate on our team yesterday just price out, a simple graph of where the market was looking at rate hikes / cuts 1 year forward. And that line kind of makes it look like that no one has any clue what's going to happen in the future. And so, what I say to folks when we talk about, could we end this year with 0 rate cuts? Our own rate strategist says 1 rate cut. I will just tell you, like, these unknown unknowns, these tails in the markets are still not being priced to a level that I think they actually should be. That's really the bottom line. These are tails that can happen.
Amy, the collective memory of most of our listeners and viewers is that your world of derivatives is great until suddenly it's not. And there's always a surprise. I'm going to say portfolio assurance in 1987 and, other stuff as well. What's the shadow out there that's building up, whether it's leverage or unleveraged? What's the derivative with a notional that's getting out of control and sometime could impinge on all of us?
So, Tom, it's really interesting that you bring this up. This was actually part of my roadmap in my 2024 outlook for volatility. And
you're going to send me a 40-page deck like Amanda Lynam over at Blackrock? Please.
I promise I won't, but I'll give you the bottom line, which is, this rise of 0DT, 0 data expiry options, has kind of changed how much of a GPS options can be. It used to be we got a pretty good idea of what we thought was going to happen 1 to 3 months out. all this trading has shrunk in tenor so much that the options market isn't as great a GPS anymore, right? You're going to get that signal for a left-hand turn, but it's going to be in 50 feet instead of 1,000 feet. That's the bottom line.
Amy, what's the number one trade you hear your clients talking about these days? Where are they looking to put some positions on?
You know, I would tell you they're upside trades, but they're actually upside trades for worry. So we continue to see a lot of investors focused on energy upside. You know, that's a geopolitical tail hedge. Yeah. And then the same thing with gold, which has been very popular. That's also not only a geopolitical tail hedge, that's an inflation worry concern. So they're expressing it in upside, but the reality is these are downside worry concerns that using these sectors for.
Do the big techs, the ginormous free cash flow building tech companies, did they message in the derivatives space? Is there a skew to Apple, you know, or another Greek letter to Microsoft? Are they part of your study?
Oh, absolutely. You know, we can't ignore these. The weights, Tom, are just so heavy. It's like if tech goes, the market goes. It's as simple as that. I'll say you picked Apple. Apple's in a little bit of a unique position because of, you know, concerns around China, different things there. So that skew has been more on the downside, but everything else, even though exuberance has waned, people are still much more focused on that right tail. You know, your NVIDIAs of the world, your Metas, people are still more call demand outweighs put demand.
And is that still true on AI? Because AI was certainly the trade here for 2023, Amy. Is it still kind of the trade here, or are people pulling back, do you think?
You know, they're not pulling back, but they're kind of like moving away from the OGs. So if NVIDIA was your OG, everyone wants to know what the AI adjacent names are. So you get situations like Supermicro, you saw that call skew invert. You know, obviously you see that run in semis, but it continues. So folks keep saying to me, you know, show me the AI related names that aren't your NVIDIAs, but we think we can use options express upside in.
What is your SPX target? How do you fold that into derivative analysis? Where are we 12 months out on SPX?
Tom, I'm so lucky because I don't have to put out an S&P target. That's the job of my dear friend, Lori Calvasina. You know, she has the hardest job in the world. I just get to talk about the derivatives market.
Okay. We'll get Calvasina on. We're going to get an answer to this.
We know reach
Amy, thank you so much. Amy with Silverman.
Yep.
I'm busting her chops with RBC Capital Markets. Really some smart discussion there. And folks, you know, read a primer on this. If you're like, what in God's name was she talking about? You don't need to do a lot of math to learn what some of these phrases mean and what they signal. And the arch issue here is you're in the market and you're worried and you want to protect yourself, so you hedge.
Yep.
And you have to pay a fee.
You call up the desk at RBC Capital Markets.
Yeah, and you protect yourself. And that's sort of the dynamics that the pros talk about when they listen, and they do, to Amy Wu Silverman. Futures up 12, we listen to our news from New York City. Here's John Tucker.
All right, Tom, Paul, and Lisa, President Biden on the campaign trail. Speaking in Pittsburgh yesterday, the president vowed to keep United States Steel American-owned.
U.S. Steel has been an iconic American company for more than a century, and it should remain a totally American company. American owned, American operated by American union steelworkers, the best in the world. And that's going to happen, I promise you.
Japan's Nippon Steel plans to acquire U.S. Steel for more than $14 billion. Well, today, the president will accept endorsements from at least 15 members of the Kennedy political family during a campaign stop in Philadelphia as he aims to marginalize the candidacy of Robert F. Kennedy Jr. The flat tax making the rounds in former President Donald Trump's inner circle. Economists he's talking to are urging him to get behind a single tax rate for all income brackets. Billionaire Steve Forbes says he's pushing a 17% rate with generous exemptions. Senate Democrats have tossed impeachment articles against Alejandro Mayorkas, and Bloomberg's Dan Schwartzman has more on that story this morning.
Democrats in the Senate voted to dismiss both articles of impeachment against Homeland Security Secretary Alejandro Mayorkas. The vote was mostly along party lines, except for Alaska Republican Lisa Murkowski voting present on a measure to toss the first impeachment article. Republicans have accused Mayorkas of refusing to enforce immigration laws. The secretary is the first sitting cabinet member in U.S. history to be impeached. Democrats say the measure was unconstitutional because it didn't meet the constitutional bar of a high crime or misdemeanor. Republicans accuse Democrats of failing to take the charges against Mayorkas seriously and that the American people deserve to hear the evidence. Dan Schwartzman, Bloomberg Radio.
And automakers may be pumping the brakes on EV production in the U.S., but charging challenges are vanishing at a rapid clip. Almost 600 public fast charging stations were switched on for U.S. drivers in the first 3 months of the year. That's a 7.6% increase over the end of last year. This according to a new Bloomberg Green analysis of federal data. And Prince William returns to public duties today for the first time since his wife's cancer diagnosis, bolstering the royal family's ranks as health problems continue to sideline the princess as well as King Charles II. William is sent to visit a surplus food distribution center. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom.
John, thanks so much. There's something out here, and we're working on getting Mario Gabelli, and I don't know where that stands right now. He's been a huge supporter of what we've done for years. I'm looking at a 30-year chart of CBS Paramount, and there's no other company that could do this Class A, Class B stuff. Where it's a public company, but it's really not. First of all, it's trading where it was in 1994, 1993. We've enjoyed 65 to 11. Who's going to put this thing out of its misery, Paul? People go after Musk. Musk is a Boy Scout compared to the shareholder destruction I see here.
Just extraordinary. You're absolutely right. I was back on the stock back in the early 90s. Mel Karmazin took over when they merged the radio business into the old CBS.
It went from 10 to 40 and you retired.
Exactly
Great.
right. And now, so we got the Sherry Redstone, the Redstone family, Sumner Redstone's daughter, the control shareholder of Paramount / Viacom / CBS / and so the question is, what do you do here? I do not see a natural buyer out there. I do not see a strategic buyer. I thought maybe a financial buyer, a private equity firm would come in here because there are stable cash flows there that could support debt, but they've already got a lot of debt on this company here. So it's really tough to see a strategic or a natural buyer here. That's why you're getting some of these folks that I would not consider really quality buyers taking a look at this company right here. So it's a really tough time. And again, it goes back to Sumner Redstone. Rupert Murdoch 6-7 years ago when he sold his company to Disney. That looks like the smart trade.
Oh yeah,
at the time.
There's no
smart
question.
Exit,
Even
boy.
among the people, the people I hang out with, we don't know what we're doing. We're just reading Amanda Lyman's 40-page deck. But the answer is Mr. Murdoch looks like an absolute genius sliding out there and taking care of his family at the same time. Interesting. I just can't say that you bring up on the Bloomberg terminal, folks, Paramount back 30 years, and I'm telling you, there's no other story of shareholder destruction. We'll continue to follow that. Futures lift up 15, Dow futures up 104, the VIX 17.85. Good morning.
24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing. We have S&P, Dow, and NASDAQ futures all up about 0.3% right now. The 2-year yield at 4.94%. That's little change. The 10-year yield at 4.58%, and that is little change. To commodities, we have spot gold higher at $2,382 an ounce. And over to oil, we have Brent crude $86 a barrel. NYMEX crude $82 a barrel. Some layoff news. EV maker Rivian down nearly 0.5% right now. It's going to cut another 1% of its workforce. It's the second round of layoffs this year for the company. And that comes right after Tesla said it's going to reduce its global headcount by more than 10%. And speaking of those Tesla layoffs, Tesla chief Elon Musk apologizing for, quote, incorrectly low Tesla severance packages that were sent to those former employees. They said they're being fixed. And then Tesla also getting a downgrade from Deutsche Bank to hold. That's on the likelihood that the company will delay plans to produce its Model 2 mass market vehicle. Tesla shares down 2%. That is your Bloomberg Business Flash. Tom and Paul.
As I'm sure all of you know, I mean, Lisa Mateo's got this tattoo to her brain. We get a lot of help. Like, I'm just basically sitting here having Tang Zero trying to move through the morning. And in Europe, my help is a guy named Tim Craighead, who was legendary out on the street. Did you hire Tim Craighead?
I think we did back in the day. We got him from Goldman Sachs. It was a huge hire.
I remember looking at the press release going, are you kidding me? So, to get to the point, when I talk about, European stocks, I don't know anything about them. Thank you, Tim Craighead. He starts with LVMH, came out a little weak China, booming Japan. And he goes through ASML. They came out yesterday, a little shaky, but fine. Some nanometer stuff I don't understand. A small company called Nestle, HSBC, Novo Nordisk. They're doing the I got to lose weight stuff.
Yep.
Porsche, I can't afford one. Shell, and some German firm I can't pronounce. But, I mean, this is the European earnings story, which we don't pay enough attention to.
We don't, too. Fortunately, we have the Bloomberg Intelligence folks in London all over this for the Bloomberg clients, and Tim Craighead leading that whole effort up over there in London.
I mean, we'll have to see. I mean, they just had Nestle up, and, I know...
He's coming over in a couple weeks, Tom, to New York, so we'll get him in the studio.
You think he's ever had a Pop-Tart? No. I'll bet he's never had he's so British. He's probably never had a Pop-Tart. Nestle, balance between pricing and volumes, sustainability of profit margin, and then they're going to look at the foreign exchange impacts. And folks, good point from Tim Craighead. For your earnings, and you're going to have to adjust for the recent strong dollar. That's going to be throughout all of our earnings as we go into earnings season.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages around the world. Brought to you by Interactive Brokers. Discover the future of trading with their next generation trading platforms, IBKR Desktop. I said IBKR Desktop. Download IBKR Desktop at ibkr.com/desktop. Lisa, I've been so buried reading Amanda Linen's 40-page deck. I didn't even look at the newspapers.
Really
what do you have?
Right. We're starting with buyers being back in control in the housing market, but only for luxury homes. Okay, this is from Realtor.com. In March, a share of homes that were priced over $5 million, they had their price reduced. That was 7.8%, which is up 1% from March of 23, up 3% from March of 2022. The area with the largest share of price reduction was Austin, Texas. And that's really a big change because that's where a lot of people went to when remote work kicked in. Other markets seeing those big price cuts for the luxury market, Tampa, Florida, also Phoenix. And the Wall Street Journal, they spoke with this family who had this Phoenix home. It was priced for $11 million. Okay, it had 5 bedrooms,
nice.
upscale Arcadian neighborhood,
like
pool, game room, bar, yes, fully stocked. Now cutting the price to $8.7 million. So these luxury homes, they're starting to come down in price.
Yeah, I don't know what to make of it. And Jay Hatfield, I thought, was great about this.
Yep.
Folks, the thing I'm most unsure about is work from home.
Yeah.
I don't have my bearings on it. Jay Hatfield's telling me you're going to be fired from home. I don't know.
Yes.
Nick Bloom out at Stanford saying move to Phoenix.
Yeah, I know.
And I Lisa, it's the single thing right now, folks, I feel the most unsure about.
Yeah, no, it's true. It's true.
All right, good stuff. So we get the luxury home markets pulling back a little bit. Fine.
What about the Upper West Side?
The Upper West Side. I don't know if
Is
that's
it
pulling
pulled
back
back?
too much.
I don't think so.
We'll stick with Phoenix.
Next.
All right. Electric vehicles, we talk about it all the time, right? Range anxiety. This is the biggest thing for people who are kind of on the fence about buying EVs. Well, Google has announced its Maps app is going to have something in it that's going to help those people find chargers, whether it's parking lots, garages, real-time information, how many ports are there, how much the charging speed is there. It's going to help you find on the longer trips.
That's
They
helpful.
actually did it with Waze last month. But it's really supposed to give that boost because a lot of people still.
What do you think, Paul?
I think that's going to be big. I'm not an EV person yet. I mean, maybe at some point I'll get there. But the folks I do talk to, that is an issue. Kind of like where are the charging stations? I get there, and they say there's going to be 8 or 12 pods, 4 of which are out of service,
or not working.
and then so the lines are ridiculous.
Yeah.
In which case, your entire plans are kind of screwed, and then. It's not like pulling up to the Exxon station.
No.
And seriously, folks, we've got a guy, surveillance EV guru, Edward Ludlow.
Yep.
Who's living this
all
right
in now.
now.
Yeah.
We're trying to get him on the show tomorrow. His people have been very difficult.
Yeah.
But we're trying to get him on the show tomorrow to get Ed Lowe. It's 7:52. Come on. 6:05. It's 4:52 a.m. He's in his beauty rest.
But he's got to
We're
drive
trying to
a
get him
Tesla out there. I mean,
He
the
does.
price of gas in San Francisco
Yeah, that's
is
a great point.
ridiculous.
That's a great point. Taxes. Okay.
Yeah,
very good.
we'll have to see. I'm not. All I see is Teslas. I don't see anything else.
No, I see a Rivian. I see the trucks around.
I like
Rivians.
electric buses really work. I really get like in
And the
city.
Amazon delivery things, the electric delivery things are all
They're
over
all
the place.
over, too.
Yeah.
Okay. Next, what do you
They're
got?
growing. All right. What's also growing? Starbucks unionized workers. Okay. So Bloomberg Law did this analysis. They took National Labor Relations Board election data, and they found out that unions have organized more than 10,000 workers at Starbucks locations nationwide. March was a big month. They saw 21 union wins. That resulted in 376 newly union represented baristas, shift supervisors. So you see kind of this growth that's
Is it
starting to
store by
happen.
store, I
It's
guess?
percolating.
Yeah,
Yes.
percolating.
Yes, I do
Very
have-
good. I like
Very good
that.
Coffee. Most of the audience doesn't know what percolating means.
I have a percolator.
I used to be, my grandmother had the coffee pot in an incredibly simple kitchen with the Parliament cigarette out of her mouth.
Yep.
With Kurt Gowdy and Boston Red Sox baseball, and I'd be mesmerized by the one thing moving in the kitchen, the percolator. There we go. It's
I love my
percolating.
percolator. But yeah, so unions growing. And then finally,
Oh,
I
boy,
know
this
this is it, Tom. We have to switch up the music selection tomorrow because Taylor Swift's latest album drops on Friday.
I saw that.
It's
Yes.
not released. It drops.
It drops.
It drops.
That's how the kids
I
say
hope
it
she's
now.
with Jack Antonoff again in the Nationals. I love what they've been doing, the National, I should say. I love what they're doing. What I find with Taylor, and I have a huge respect for her, but what I know is on that album, there'll be one song that I will find jaw-dropping. It's
Just
never
one?
the hit.
Just one?
Just one. I find one song always on the album that I just find jaw-dropping.
Well, the one thing that people say they like about, or what the New York Times is saying, is that it's going to be on vinyl, CD, even cassette.
Don't get me going on
cassette.
vinyl. Do you know, I just acquired vinyl records for one of the Offspring.
Oh, it's coming back.
And I said,
you.
"Are you kidding me? We got rid of vinyl."
Yes.
And she's like, "That's all people want.
I
They
know.
want vinyl."
The sound, they want that.
Do you have
the sound
vinyl
of
at
it.
home?
No, my dad has a huge, thousands. When I say thousands of records, I mean
You got to get a table then.
crates and crates.
Yeah, start with
And-
the Doors, L.A. Woman.
Yeah. He
That's
has
a good one.
everything, every rock.
Paul, do you do this
Yeah.
vinyl thing?
No, but my daughter just recently, for a gift, gave me some old Bruce albums on
Oh,
vinyl.
see?
So, and I had them back in the day.
But do you
I
have a
have no
record
idea where
player?
they. No.
on YouTube, on live chat. I need you guys on live chat on YouTube right now to live chat in and tell me about vinyl. Somehow I think this is in my future.
What's the attraction?
The Offspring's going to have a vinyl record, and I'm not going to have a record player to play it on.
See? Like,
I'm just going to have it's a coaster. Lisa Mateo with the newspapers.
Yep.
Thank you. Paul, I mean, we got rid of CDs finally. We
I
have
know,
no
I
CD
know.
players in the house. We stream. We're on YouTube. It's like Apple CarPlay. It's all digital
I know.
and all new.
Yeah, absolutely. It's coming back. What's old is new, Tom.
Yeah. Who should we play? He stole the movie of We Are the World. There's Michael Jackson and all the others. And Huey Lewis is there just saying, OMG, I'm here. What a set of hits.
Lawrence
Huey
classics,
Lewis
67.
today. Good morning.
Damn if you do.
Lawrence School.
Lawrence School, class of 67, along with Mr. Eisner.
What they're giving, 'cause I'm working for it.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in that fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Through the week, we stagger out of the real geopolitical mess of Monday and Tuesday with this. I love what Damien said, a healing tape. It's a healing tape here, right?
Okay,
now.
He said that?
Yeah, futures up 14. VIX 19 level. We almost got to 20. We're into a better place, 17.87. We're really trying to frame out the bond space. Amanda Lynam with us with a 40-page PowerPoint. We said to Kathy Jones, I said, like Liz Ann Saunders and Kathy Jones, they don't do 40-page PowerPoints.
No.
They show up with a 3x5 postcard and
they
say,
do.
here's what we believe. Kathy Jones with us here in a moment here on what yield is going to do, what it's going to mean for the 30-year mortgage, what it's going to mean for getting through 2024 into 25 as well. 2-year yield, 4.94%. Paul, I look at this, and I guess I got to look at oil coming back from a 90, 91, even 92 print. 86.68. It's somewhat quiet out there.
Yeah, I mean, we had some geopolitical risks for certain priced into crude oil around the world. Maybe a little bit of a pullback here, but still well above kind of the trend line for the last, 6 to 12 months.
Yeah. On Apple CarPlay, on YouTube, search Bloomberg Podcast, the live chat. I'm going to get on it right now when we go to Lisa here, but on the live chat on YouTube, that's valuable as well. And Bloomberg Surveillance, we're brought to you by Cohn-Resnick Advisory Assurance Tax. Cohn-Resnick can help your business quantify its financial exposure using risk-based strategies and analytics. Visit cohnresnick.com with our Bloomberg Business Flash. Lisa Mateo.
Good morning. Yeah, futures are advancing, and this is after Wall Street extended what is now the S&P 500's longest streak of losses since the beginning of the year. Now, the declines come as Fed's Loretta Mester said policymakers can hold rates steady. Yesterday, the Fed's Beige Book survey, well, among the other things, it showed America's economy had slight gains since February, and consumers remain very sensitive to inflation. So we'll get to NASDAQ futures. They're up 0.3%. Dow and S&P futures up about 0.2%. The 2-year yield at 4.94%. That's little change. The 10-year yield at 4.59%, and that is little changed. To earnings we go. Taiwan semiconductor manufacturing outlook beat estimates. Its AI demand really fueling its business. ADRs are down about 1%, but TSMC, the main chip maker for NVIDIA, Apple, we have NVIDIA up 1%. Apple shares are little change right now. We'll stick with chips. We'll go to Micron right now. They're up more than 1%. Sources saying it's going to get $6.1 billion in U.S. government grants starting next week. And finally, the housing market, which heads into the spring selling season. We have D.R. Horton. They increased sales expectations for the full fiscal year. Builders, they're benefiting from that shortage of previously owned homes. Those shares are up about 3%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Right to it. Kathy Jones joins us, of course, with fixed income, chief fixed income strategist at Schwab. What are people doing? Not what they're saying, not what they're talking about. Sweeney's told me they're loading the boat on 3-month paper, cash, money market funds. But what are we actually doing with our money?
Well, what we're seeing among our clients is some movement out the curve. There's still a lot of money in 3 months.
Out to 4 months T-bills?
Yeah, even a little beyond that, Tom. We are seeing people start to extend duration because when you can get 4.5 to 5.5, depending on what asset class you're in. Say you're in investment-grade corporate bonds at 5.5%. People are like, okay, 5 to 7 years duration is okay with us for that. But it's only when those yields are at that elevated level. Otherwise, yeah, there's still a lot of money sitting in short-term paper.
How about on the credit risk side? I mean, I'm willing to take a little credit risk here. Where do I go? I mean, do I go investment grade? Do I even push out to high yield? Because high yield is where the return's been the past couple of years.
It has been. We're still a little bit cautious on high yield because the spread is so narrow.
Everybody's talking about the spread is so narrow. Is it historically?
Yes, it is low.
Put it in perspective for us, because I mean, historically, I've heard that from a lot of folks saying that it's just not worth it these days.
Yeah, the problem is that when high yield spreads move, they move really fast and they spike in a big way, 100, 150 basis points really quickly, and that can eat into your return. Now, if you're a buy and hold investor and you're careful about the high yield bonds that you're buying, you're not buying triple C's or, cuspy on the edge of default bonds, then, if you hold the coupon, the all-in coupon's really high.
Yep.
But we do have maturities coming up in 25. We do have elevated yields where these companies have to roll over. So we prefer investment grade because even though the spread is low there, the quality has been improving, and the all-in yield is pretty attractive.
So credit risk, how would you characterize credit risk these days? Do you feel like you're taking on above average credit risk in the marketplace, or is the credit quality of corporate America pretty decent?
I think it's pretty decent. Corporate profits hit an all-time record high in late last year. So will that continue? I don't know. Probably not quite at the pace that it has, but still not really looking at a deterioration in higher credit quality bonds.
What does CFOs think? Like, what are you seeing in issuance? We didn't get to this with Amanda earlier. I mean, we've all been wrong about a more buoyant economy. We've all been wrong about transitory, non-transitory inflation. I'm done with landings. All I want to do is land at Newark safely and try to get to the gate in under an hour. But how do you shift here if you're a CFO? Do you do more issuance even if the coupon's higher than it was 2 years ago?
Yeah, you do more issuance and you have calls. You have callable bonds. So you issue maybe at 5.25% coupon.
Give a little more coupon right now to give that call option out.
Right, but then you have some sort of call option on it to call it in and replace it if yields come down. So I think if you need the financing now, you do it, but you do it with a call.
Right, Paul, the 97-year Austrian piece I bought at the top, it's got a 96-year call option.
Exactly.
I feel great about that. It's
really
worked
I'm
out.
sure you're going to benefit from that. Kathy, when you look at your average Charles Schwab customer, are they 60-40 equity fixed income? What's their portfolio look like these days?
Oh, it's really hard to generalize. We try, our guidance is always to have a diversified portfolio and then to structure it around your own particular needs. So I can't really generalize about the average client because we don't really have an average client, but we do try to guide towards having that balance between fixed income and equities. And, that was hard when yields were really low.
Yes. Right.
But now that yields are more attractive, we're seeing, it's much easier for people to make that switch.
Are there sectors in the corporate credit side that you like within maybe investment grade or something?
So a little bit more cautious maybe on consumer discretionary if we do get a slowdown in the economy. But broadly speaking, again, within fixed income, we try to be as diversified as possible. So not just, isolated to one industry or one or two industries. We like to have issuers from across the economy.
What are people doing right now? Are they barbelling? Are they laddering? What's retail doing to goose up the coupon?
They're doing both. So you can, the barbell's pretty easy to do these days because we do have that inverted yield curve.
Yeah.
And so if you barbell, you're not giving up as much yield because it flattens out a little bit as you go out. But we also, ladders are kind of a staple for a lot of people because it takes them out of the timing issue. They just keep laddering and not worry about it.
Critical question. Are you laddering for total return or you're laddering to clip the coupon?
Most people ladder for clipping the coupon. That's generally the idea, but opportunistically, we'll see people ladder for total return as well.
Yeah, I look at this, Paul, and my head would be spinning if I was like income driven.
I know. I mean, there's a lot of places to go these days. How about municipal bonds here? I live in New Jersey, one of the higher tax states. I mean, I love municipal bonds. What is a typical Schwab, a municipal bond exposure?
Yeah, so, in higher tax states like New York, New Jersey, California, we see a lot of people interested in municipal bonds because it's one of the sources of tax-exempt income.
Darn right.
Kathy Jones, thank you so much with Charles Schwab. Greatly appreciate it this morning. Futures up 11, Dow futures up 85, the VIX 17.95. Really, really interesting mix this morning. Can I just mention gold up $13?
I know,
back
Tom.
to $2,400. Good morning, Dennis Gartman.
Yes.
With a weaker yen.
Great call.
Gartman looks like it's like the trade of the decade.
It is. I mean,
it's like what Gary Schilling was doing on deflation years ago with Volcker.
Exactly. So you got gold up. Even the copper. Copper's up another 1.5% here today to $442. So the precious metals and the base metals moving higher, Tom.
We're going to have to see. The dollar pretty much stable here, like a 106 as it is. With our news in New York City, here's John Tucker.
All right, Tom, late word. Ukraine says it attacked a large airbase in Russian-occupied Crimea. This highlights its ability to strike the Kremlin's military installations far beyond the front lines despite growing ammunition shortages. The strike took place early today. President Biden talking tougher about China as he highlights the challenges to its economy.
They've got a population that is more people in retirement than working. They're not importing any. They're not bringing. They're xenophobic. Nobody else coming in. They've got real problems. I'm not looking for a fight with China. I'm looking for competition, but fair competition.
The president's latest rhetoric comes 2 weeks after his last phone call with Chinese President Xi Jinping. The hush money trial against Donald Trump resumes in New York this morning. Jury selection continues in the first ever criminal case against a former president. We get more from Bloomberg's June Grasso.
The trial judge has set aside 2 weeks for jury selection, but that much time may not be needed. 7 jurors were sworn in on Tuesday, so that means 5 more jurors and 6 alternates still need to be selected. The jurors who survived the grilling by lawyers are an information technology worker, an English teacher, an oncology nurse, a sales professional, a software engineer, and, in a bit of a surprise, 2 lawyers. In New York, June Grasso, Bloomberg Radio.
And Donald Trump's campaign wants other Republicans to pay up if they use the former president's name, image, or likeness in their fundraising. In a new campaign memo obtained by Bloomberg News, all candidates and committees who use Trump in their fundraising appeals must give a minimum 5% of the money they raise to the Trump political operation. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom and Paul.
I give up on economics, finance, investment. The biggest outrage today, the biggest response we've had is on vinyl records.
Yep.
Richard's got the White Album, fluent from Miami Beach, BOAC, and he's looking at the serial number on the White Album from 1 million years ago. With all the fancy, Maureen emails in. She says she loves vinyl. She only listens to vinyl. I mean, I'm missing something here.
I mean, that's kind of how we grew up listening to vinyl on my parents' record player in the den. It was probably circa, I don't know, 1950 maybe?
1910?
Yeah, 1910, exactly.
Yeah.
Then we graduated to the 8-track and then cassettes and CDs. And
I'm looking here at the Music Hall USB 1. It looks like the turntable we had on the floor next to the dog in the dining room. And it's like, I guess you got to connect it to powered speakers. I mean, it's a whole new world after all.
It is. We're all going back.
You and I are just we're not up to speed on this. I mean,
no. I mean, we've graduated. We went
with the 8-track. Are you saying it?
Remember the 8-track?
Hoping it'll come back, make it come back there.
That was. Do you still have the 8-track in the Hummer?
It's in my car.
Yes,
absolutely.
Right, it is.
How about Fidelity? There was some cassettes were like, oh my word, it's a whole new world. Only Tucker would still have the 8-track. Futures up 10. Dow futures up 79. The VIX 17.94. The 2-year yield, you're looking at 5%. You're at 4.94%. Really diving into earnings season and anticipating the mystery of what we see in earnings. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are advancing, and this is after stocks fell for a fourth straight day. We have NASDAQ futures and Dow futures up 0.2%, S&P futures up 0.1%. The 2-year yield at 4.94%, that's little changed. The 10-year yield at 4.59%, and that is little changed. Over to commodities, spot gold higher at $2,384 an ounce. Brent crude, $86 a barrel. NYMEX crude, $82 a barrel. Few companies making news. We'll start with Alphabet's Google. They're up 0.3%. It actually let go of 28 employees that were involved in protests to get a joint contract with Amazon to provide AI and cloud services to Israel. And then you have BP. Their ADR is down nearly 1% right now. They're restructuring its top management. Now, the company says the executive leadership team will be cut to 10 members to simplify its organizational structure. And I thought this was interesting. This is from The Athletic, reporting Caitlin Clark nearing an 8-figure endorsement deal from Nike. Expected to receive a signature shoe. She also received offers from Under Armour and Adidas on top of that. You go, girl. That is your Bloomberg Business Flash, Tom and Paul.
Do you think in the movie, like her mother's going to be on the phone with Nike going, Caitlin needs 1% of the gross?
Yes.
I mean, come on. She's going to
Like
watch
Jordan,
the Michael
yes.
Jordan movie like
Yes.
3 times. And Matt Damon's going to be on the other end of the line. Mrs. Clark, your daughter, please, we can't give her an in. They're all going to go mental. It's going to end happy.
Yes.
That's how it ends.
Yeah.
She was great on Saturday Night Live.
Oh, she was excellent. She was hilarious.
And the guy, what's his name? Michael, the announcer.
At the news desk, yes.
At the news desk.
Oh, yeah.
He's just so classy. He's just really
Roasted
got it nailed. What we're doing today is we're dealing with twisted research notes. We had Amanda Lynam, 40-page PowerPoint. What's that about?
Yep.
Kathy Jones comes in from Schwab with a 3x5 card. And now we got Alex Morris with a breath of fresh air. He's saying, nobody can predict what's going to happen with our geopolitics. Get over it. Thank you, Alex, for giving us to us with FM Investments, here to look at the equity market as well. I like what you say about stocks. Stocks apparently don't care. And into the earnings season, I think you're right. They're just in their own world right now. Are stocks discrete from everything else?
Well, they try to be. I think the problem is folks assume that the stock market has this like crystal ball where it can predict war and elections and all these other things. And historically, it's pretty bad at it. It turns out it does exactly what it's supposed to do.
Which is look at earnings and free cash flow growth.
And be greedy. And
this is so quaint, I can't stand it. Can we continue with this? We need someone. Remember the TV ad? We believe.
Yes.
Was that Smith Barney or was that E.F. Hutton?
I'm not sure.
We believe.
Exactly.
If we don't believe, what do we hang our hat on forward?
Yeah, well, I think the good news is we're going to see a pretty good earnings season, right? We see a consumer that's still pretty strong. So all of the underlying fundamentals of the real economy, although we see some inflation, and you have to talk about inflation at some point, all of the other bits and bots of how to run the economy pretty strong, which is, we've been working on that for 2 decades. Ever since 2008, we thought, all right, we need to hit the reset button and reconstruct something fundamentally more sound and encourage businesses to do the same. And low rates for a long, long time allowed them to do that. And we seem almost shocked that they're actually have learned something.
Exactly. So, all right, Alex, so what's been, I guess, the story of this equity market, at least from 23 onward, has been kind of these big cap tech names that have really been driving the stock. Do I still kind of stay with that trade? Do I try to find some value? Do I go small cap? Do I look elsewhere? Or do I just say, heck, I just got to own the big tech names?
Well, I think you have to say, heck, I have to own some of them, right? It used to be I had to own only them, right? Because you didn't get paid to do anything else. But what was the Mag 7 3 months ago was the Fab 4 4 or 5 weeks ago, and now it's maybe 1 or 2. So that trade is still interesting and such a big part of the S&P 500. You can't ignore it. But you should broaden out. I think there's a lot of great trades we made elsewhere. I'm not ready to go full equal weight. There's just so much juice in that tech space. You need to have it.
Okay, thank you for that, because we don't hear that too often, believe it or not. What's a terminal value you frame for these high multiple luxury stocks, tech stocks, and the rest? Do you have to study out, is the new 3 years, 5 years to justify owning Microsoft?
Well, I suspect it's probably even longer than that, which is kind of kind of hard to fathom because if you
It's
look
not
at
good for financial media, but continue.
exactly, and which unfortunately I don't think the market, they care less about that. I think the problem is if you went back 30 years, Apple was bankrupt, right? And now it is what it is. So it's hard to really think that far out. But we look at so many of these discounted cash flow models that are trying to figure out, is it 3 years, 5 years, 4.5? And I've never seen a discounted cash flow model that's right. So show me one that's right, and then I'll agree with the number that's in it. It just hasn't happened. It's like I've never seen a bad back test either for a strategy.
Paul, in the strongest terms, I agree, and my biggest focus there is the idea that you get out to some so-called terminal value, which is not much different than Mickey Mouse at Disney World.
Exactly.
Or the goofy breakfast at Disney World.
Yeah, look, I question why we look at a terminal value of names that we care very much about momentum on. Like the answer is these things are responding to short-term, 2-6 month trends in the market. Let them run. I don't really need to predict what Microsoft's going to do 5 years from now. I can't. I mean, I think some folks are hoping they can. They're wrong. They can't. But we can watch what's happening short-term and ride those trends because that's what those tech companies are great at doing.
So what are we doing here at earnings season? I mean, we're kind of getting into the meat of earnings season. We had the big banks last week. What are you looking for? What do you expect to see? What do you think the market needs to see?
So I think we're going to see pretty much on the mark to slightly above earnings across the board, across sectors, right? It's a big gross overgeneralization, but I think that's where we're headed. I think the banks really responded well to, the change in rate structure. Net interest margin was up and strong. I think the good news is, though, we finally have settled in on pretty good predictions, and that's the key. Like if you look at the big tech stocks and the next rung below them, they really react to what is the expectation and can I meet that?
I think this is brilliant. And Alex, can I suggest that we've been addicted, particularly within the tragedy of a pandemic, to Fed focus on a simplistic basis. We've been completely focused on the financial side of things, and we're getting back to the real economy and actually studying what the GDP equation's doing.
Exactly. And we do as much Fed watching as anyone. I live in D.C. When I leave DCA airport, plane takes that nice hard left, and I can look out and see it, and there it is. And my answer to folks is that's about as much Fed watching as really you can add into what you're going to do tomorrow in the markets. Is make sure they're still there, but practically speaking, we do have to care about what companies are doing, what people are buying. And my big worry isn't inflation hitting 2% or 2.2 and them calling it done. It's what happens if it ticks back up? I mean, I'm looking at commodity prices and starting to get a little nervous there and think that's where they need to come in.
Paul, he's got a fan club. Can you believe this? Alex Morris, I mean, Katie, how do you pronounce this? Greifeld. Greifeld. Yeah, Katie Greifeld. I am a huge fan of Alex Morris. Wow. It's no better than that.
That's high praise. I'll take
Catherine
that.
Thank Greifeld. It's great. I don't know. She's probably on Gus on the field somewhere. Katie Greifeld. Come on. We need to talk to Katie about BitDog.
Yeah, exactly.
Are you a BitDog believer?
I'm not.
Thank you. Continue. Why aren't you a BitDog believer?
Yeah, anytime I see bit, I hear .com, and I wonder, AI, we're just adding these words because we don't really have business models.
But they're going to have it. I still don't know. Do you understand having?
I understand it's a thing, and I get that things double, but I also, I just wonder, why are someone's electrons better than my electrons?
So what's your visibility on a Dow target or an SPX target? Are you just saying you're not going to predict it, you're just going to watch earnings, and it's a linear function out 3 years?
I think that's probably right. And where do we put money if we don't know? You seem to go between SPY and something like 3 month, right? Money markets where things are going. We run a fund that rolls the 3 month called T-bill. We see a lot of inflows recently into that because folks who don't know where they want to go have learned two things. One, stay short, stay liquid.
Okay. All I can ask is every 3 times you're on with Greifeld, at least come on with us.
Give us a shot.
Absolutely.
I mean, Greifeld owns you. I mean, I understand. Alex Morris, thank you so much with FM Investments. A real breath of fresh air there, folks, about this whole certitude. I just looked it up. It was John Houseman, Smith Barney.
Yes.
They earn it.
Yep. That's right.
Can't do it
Make money the old-fashioned way.
Yeah, they earn it.
Right.
Yep.
Smith Barney.
For those of you younger, you have no idea how certitude was sold in the 60s, 60s and the 70s. Some of those old classic ads. Our classic ad is to give you a data check. Futures up 7, the VIX 18 even. The 2-year yield, we're all watching that, 4.95%. On YouTube, search Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are just moments away from initial jobless claims for last week. So ahead of it, let's check in with the markets right now. We have NASDAQ futures, Dow futures, S&P futures. They're all up about 0.1%. We have the 2-year yield at 4.95%, and that's up about 1 basis point. And the 10-year yield at 4.59%, and that is little change right now. Okay, initial jobless claims. The survey was for 215,000. Tommy came in at 212,000. So it's a little bit of a tick lower.
Yeah, thank you, Lisa. I'm sorry. I'm looking for the revisions. We don't have the revisions.
Not yet.
Yeah, but the answer is the 4-week moving average is what I look at. These are weekly data, high frequency. Someone like Drew Mattis at MetLife thinks this is a big deal.
Yep.
There's the revision, spot on. It was 211
right
is 212, inconsequential. These are, stable, sequential data that gets you to a 3.8, 3.9% unemployment rate.
Yep. I mean,
the gloom of 4.1, 4.5, whatever.
Right. I mean, this is what a fully employed labor market looks like, Tom. I mean, we understand that the labor market has softened, certainly from the post-pandemic kind of surge here. But still, when you see numbers like this, when you see 3.8, 3.9 unemployment rate, this is a pretty solid labor market.
What matters with the economics of the moment and the mortgage rate, where it is with these new higher yields, 7.4, 7.3%. Existing home sales. Alex Steele and Paul Sweeney will have that at 10 a.m. Our economic indicators each and every day. They're brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. I've been pacing back and forth for like 4 days saying, can we get on the date calendar of Anurag Rana?
That's tough.
He is the absolute best at the cloud. And Anurag, I mean, just to start on one tea leaf, which is what is the state-of-the-art of Copilot in that computer types are saying this is the second coming of the Lord. Is it really? I mean, for computer types, how do they use Copilot?
Oh, that's so kind of you, Tom. You see, when you look at Gen AI, from our side, this is the single most important application. I mean, you can write emails, you can create pictures or sounds and anything, but the real productivity benefit is massive shortage of software developers, and you can use Copilot to write the code for you. I think it is a true game changer for anything software development. I mean, you don't talk about it in consumer applications, but this is the big enterprise use case for us. So
to me, the key question here is amateurs like me and Paul and Lisa and John Tucker and Michael Barr is a pro on AI. But,
of course.
But, Anurag, do guys like you even care about all the touchy-feely AI stuff? Or is it so large with computer people, that's what matters?
See, from an enterprise point of view, that's the number one place where you see the big productivity benefits. Now, I do have time to write emails, so I really don't need Copilots to write an email back for me. But, if you think about the number of projects that are pending in front of a software developer, it's far more than the number of people we have. So when you can figure out a way to get productivity up by 30, 50%, that is true game changer for enhancing the R&D budgets of a particular company, which means they can add more features, develop their computer applications, modernize the computer applications without having to hiring a lot more people, which they weren't able to do anyway.
Anurag, is this actually happening? Do we have evidence from, the Microsofts of the world that they're able to put out X amount of code with Y less input from engineers and stuff like that, that there is actually efficiency there? Are we seeing it?
So, Paul, it's only been, I would say about a few months at this point where this thing is really active, in reality. So one of the things we predict over the next 3 years, you will see revenue growth accelerate, but you're not going to see R&D budgets go at that same pace. So that's the margin enhancement for you. But that does not mean that you're going to be firing, software developers, because there is millions of shortage right now for people to get work done. I think the real benefit is going to be in modernizing the old applications, which were written in a language that people don't use anymore. So this particular software can convert that into the newer language, which can do more, unique things or digitize your business a lot faster.
All right, Anurag, I know you and Mandeep Singh and your technology research team at Bloomberg Intelligence have done a ton of work on AI. Have you written a definitive report out there which people can get on the terminal? How are investors that you talk to, how are they playing AI these days? Are they sticking with the chip makers, NVIDIA and so on? Are they going to the software players like Microsoft? Are they trying to find some applications? Where are investors looking for AI exposure these days?
So when you look at the first phase of that, it's all the hardware and the AI infrastructure, which means chips, AI servers, trying to figure out how to run these applications. So that's all in the semiconductor world, as well as a little bit on the server side. I think it will be a couple of years before we really see this trickle down in the software side and then in the services side.
Right.
But Microsoft, as you said, is a good example because OpenAI's backend is run on Microsoft. So when OpenAI does well or ChatGPT, you use more ChatGPT, Microsoft makes more money from there.
Anurag, you and I were sipping an eggnog the holiday season 2022. And I remember you saying, Tom, load the boat on Amazon. And of course, I didn't listen. Amazon had gone 181 down to 80, losing $100 per share. I got a round trip moonshot return on Amazon. How did they do that?
See, one of the most important things you have to understand is that tech spending is north of $2 trillion, and only a small portion of that runs on the cloud. There is no logical reason for any company to own their own data center and run those applications. You need to figure out a way to be much faster, cheaper, and far more, you could say, agile in terms of developing your applications. So the story that you and I talked about it a few years ago, that's going to remain the same even if we talk about it 2 years from now, because companies like Amazon, Microsoft, and Google are the net beneficiaries of people moving more applications to the cloud.
Paul and I have been talking about this. How are we going to generate all the kilowatts for this? Are you just optimistic utilities will be able to step up and do AI?
I had the same feeling, almost more than 10 years ago when oil was really going crazy and nobody figured out a way to do something.
What he just said there, hold on, Anurag. What he just said there, Paul, is, Tom, you dummy. 10 years ago, I was ahead of you. Okay, continue, Anurag.
No. I mean, what I'm saying is, the capitalist system figured shale out, and we have oil that is all over the world. I am fairly certain that, we will figure out perhaps in some shape or form renewable energy that can take care of a lot of these workloads. I mean, I know it's not going to be overnight, but I feel, confident in the capitalist system that we will figure out a way to, source these data centers.
All right, let's go to a name that is really confounding people now for the last 6 to 12 months, which is Apple. Stock's down 13% year to date. Is this still concern about China, phone demand out of China, that kind of thing? What's the story here with Apple?
Yeah, the story is going to remain like this, somewhat weak, at least for the next couple of years, till we get a little clarity on China. I don't see anything that can change that mindset. Now, having said that, I do believe the Apple ecosystem is extremely important and resilient. It's going to be a few years, but I'm fairly confident Apple will bounce back.
I look, Anurag, we're going to have to run here, Anurag, but you've been doing a lot of different conferences with Mandeep and others, driving forward our technology vision. What's the one theme in your conferences that you've taken note of?
That we are just in the very early innings of Gen AI. We are only in the area where we are scratching things. And, we firmly believe that that's going to lead to the next big wave of technology spending. Now, we think things are really weak right now. But having said that, perhaps by the end of this year or into next year, we feel confident that there's going to be a bounce back.
Anurag Rana, thank you so much. Too much time. Lengthy conversation with Anurag Rana, the best I know in the cloud at Bloomberg Intelligence as well. Futures up 11, Dow futures up 84. Why didn't he tell me to buy Amazon?
I don't know.
Over that eggnog.
Exactly.
I mean, it's just, talk about round trip. Wow. With our news in New York City, here's John Tucker.
All right, Tom, more than a dozen members of the Kennedy family will endorse President Biden today. It's at a campaign event in Philadelphia. That's as the president tries to blunt Robert F. Kennedy Jr.'s independent challenge. And Brown University political scientist Wendy Schiller says today's endorsements may be a sign the Biden campaign is worried.
We've seen a couple of incumbents, George Herbert Walker Bush, for example, who lost his presidency, essentially, we think, because of Ross Perot. So I think they're nervous, and they want to remind people that Kennedy is more like Trump than he is Biden and doesn't necessarily commit to democratic principles. So that's the point of this show of support from the Kennedy clan. But as I said, I don't think it's nearly as resonant today as it might have been even 20 years ago.
Wendy Schiller, Brown University, was a guest on Bloomberg Daybreak. Donald Trump facing more pressure from economists in his circle to embrace a flat tax rate. While Trump hasn't endorsed a flat tax, he has called for more middle-class tax cuts. Let's get details now from Bloomberg's Amy Morris in Washington.
Steve Forbes, former White House economic advisor Larry Kudlow, and economists Stephen Moore and Arthur Laffer are not official advisors to the Trump campaign, but they are pushing for their preferred economic policies ahead of a potential second term. Forbes is pushing for a flat 17% tax rate for all income brackets with exemptions. Kudlow supports renewal of Trump's 2017 tax cuts, but Laffer says he would support lowering the corporate rate even more. Now, Donald Trump has told allies he wants to keep that 21% corporate rate in place and instead extend individual cuts to avoid alienating working-class voters. In Washington, Amy Morris, Bloomberg Radio.
And Republican-led efforts to oust Homeland Security Secretary Alejandro Mayorkas met with an anticlimactic but predictable fate yesterday as the Senate swiftly sidelined charges against him. The Senate, after a few hours of deliberation, voted mostly on party lines to toss the two impeachment articles. And Walter Knoll, who ran the largest fund to invest with Bernie Madoff and made more than $1 billion in resulting client fees for his firm, has died. He was 93. Knoll founded what would become Fairfield Greenwich Group in 1983 to help foreign investors put money into U.S. hedge funds. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Paul, Tom, and Lisa.
I want to bring this up. It was a week ago. I don't know, Paul, you were away somewhere. I was away somewhere. I really can't remember. But Bloomberg has the absolute best college study in America ever. Paulina Cachero, Francesca Maglione, Cedric Sam, and Denise Liu. It is the single best thing I've ever seen. Hugely graphic. I'll put it out on the different social. And there's Duke University with a big ROI payoff. It's a scattered out chart. And Duke looks really, really valuable. And there's other, acclaimed names that look really, really valuable.
Yeah.
And then there's others that are not.
Yeah, exactly. Some of the Ivies. This was a great article you call out, Tom. I mean, they said, a lot of the Ivies ROI maybe not so great. And a lot of value can be found in some of the state schools across the country. And I've had a couple of my offspring go to state schools, Penn State and University of Colorado, to name a couple. So far, so good.
And what's interesting here is the majors, is the mix of majors. Like you see Harvey Mudd out in California, one of my favorite schools, just shining here. And the technology. I'm not saying to get electrical engineering in, but the idea of the payoff 10 years out, it's spectacular work. I'm going to put it out on social. We're trying. Rich, where are we in getting Paulina on? I mean, Paulina Cachero, she's impossible to get.
I know. Well,
I talked to her agent, and she can't do it. Anyways, Bloomberg with a great article. If you didn't get into Duke, a public school is the better investment. Again, I'll put that out on social. Congratulations to our graphics team for just this absolute jewel of an. I lecture the kids on at the dining room table. Yeah. They all want to go to art schools, Well,
one of my offspring got the environmental degree, and I said, for the love of God, get a minor in business administration. He did, and now he's doing well
a double
Fidelity.
major.
I'm trying to get my daughter to go to Rutgers. She doesn't want to.
Sweeney and Keene on the same page. Double major, major minor. That's the way to go. We're going to major minor in a data check. Futures deteriorate. We're up 7 on the S&P. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokerage Studio, I'm Lisa Mateo. A bit of a look to the market, but still some are partly unchanged right now. And this is after jobless claims for last week came in a bit softer than expected. 212,000 applications were filed, which was actually on par with the revision from the week prior. Now we have NASDAQ futures little changed. S&P futures, same there. Dow futures up about 0.1%. The 2-year yield at 4.95%. That's up about a basis point. The 10-year yield at 4.59%, and that's up a basis point as well. To earnings we go. Alaska Air rebounding from its Boeing MAX issues. The carrier expects second quarter profits to top analyst estimates. Those shares are up 3%. And Netflix reports later this afternoon, Bloomberg Intelligence says subscriber growth may blow past estimates. We shall see. And I thought this was interesting. Ozempic oops babies. Bloomberg reporting some women on weight loss drugs who've been struggling with fertility issues, they're getting pregnant. So now doctors are starting to prescribe the drug to these women. So now more people fighting to get the weight loss drugs that are hard to get in the first place.
Just from some secondhand, it works.
Yeah. My aunt lost 40 pounds.
It is crazy.
Yeah. I don't know.
My radar's up. I guess I'm behind on this. Everybody's doing it. It's amazing. I'm not.
It's not easy because it's a
shot
bounce
a
of
week.
nausea.
Yeah.
I mean, you just don't want to eat, is what I've been told. You just
your appetite.
Appetite's just not there.
Your appetite.
Yeah,
Right.
it's big time. I mean, so I don't know. We'll see.
Lisa Mateo, thank you so much. Joining us now, and where do you begin? It's a 3-hour conversation. It's going to be like she's going to throw a piece of chalk at us like she does in lectures. From Brown University, we're going to get an update or maybe a down date with Wendy Schiller at Brown. Iconic textbooks. Wendy, I'm looking at Johnson, the Speaker of the House. I guess he's still Speaker of the House here on Thursday morning. And I guess I could say he's doing a Boehner. But I got to go back to the way this nation was ripped apart in 1890, Blaine and all the rest of it. Just a complete mess on the way to the distraction. It was Theodore Roosevelt. When does this kind of politics end? How do you end the mess we're in, whatever your political beliefs are?
Well, I mean, I think it ends when the discord and chaos for the Republicans, at least in the House, costs them the majority. Even the most sort of extreme wing of the party, and the Gateses, the Marjorie Taylor Greenes, the Boeberts, the Chip Roys, who now seems a little bit more center, Chip Roy from Texas, they like being in the majority. I don't think they want to be in the minority. And I think if they lose the House, and they lose the House for successive periods of time, then right. I think moderation will prevail. But, you can already see the Republican Party nationally worried about things like abortion. So, the extreme wing talks about aid to Ukraine. They talk about spending. They're not talking about abortion right now. And I think that you see that all of them, or each of them, are worried about re-election, and they're worried in some districts about losing the House. So they're very strategic in what they're challenging Johnson on.
Right. Does the extreme wing of the Democrats have the same effect as the extreme right wing of the Republican Party?
Well, I mean, it's such a different mindset amongst the Democratic members, for the most part, who see government as a vehicle for good and hold government to what we might call sort of moral standards, going back to Jimmy Carter. That's sort of the branding and the self-identification of a lot of the members of the Democratic Party who are in the House, not as much as in the Senate. And it's just a completely different mindset. So they think they're fighting for the good, where the Republicans are fighting for the implementation of the strictest ideology that they have about a very small federal government. So they're really mirror opposites in what they're fighting for, and how they perceive their fight, how perceive their moral justification for what they're doing. And that's where it's just really hard for them to even talk to each other. It's like they're literally speaking different languages.
Wendy, talk to us about Speaker Johnson here. To the extent that he tries to push through some of these funding bills, it appears that he's going to have to work with the Democrats. Is that going to cost him his job?
Well, this is the big problem for the Democratic Party. They think chaos in the House leadership is good for them in November at the House level, but also the presidential level. They think it looks bad for Trump. It reminds people of Trump's chaotic presidency. Whether you like him or don't like him, it was somewhat chaotic. And so now Trump is trying to project the stability. He's, surrounding himself with different advisors, really saying, I'll get it right the second time. But if his house is in disarray, that's going to reflect badly on him. So I actually think this really has everything to do with Donald Trump. If Donald Trump said stand down, I think Marjorie Taylor Greene would stand down. So what is he doing now? What's he holding out for and asking Mike Johnson for in return for his sort of calming the waters in the Republican Party?
All right, so we're sitting here in mid-April. Boy, it seems like a long way to early November here. How do you think the Biden administration would like to run this campaign, this discussion? Are we going to have debates? How much will the Biden administration engage with the former President Trump? How do you think this plays out?
I mean, Paul, I think the Biden campaign just zeroes in on two different constituencies. One is within the Democratic Party, making sure really important constituencies like African-American voters get out the door. Young voters are important at the margins, but if you look at states like Arizona, I just don't know how important those young voters will be versus the 55 or 60-year-old voters in a place like Arizona and Michigan, for example. So that's important to them, but they also want to completely remind independent suburban voters of why they defected from Trump in 2020 and in 2022 for Trump-sponsored candidates. It's a very targeted campaign they're going to run from now until November. They're not going to go broad, and they're also going to rely on abortion as a very significant mobilizer, not only in Arizona, but Florida.
Professor Schiller, we have entertainment. We got Michael Douglas trying to be Benjamin Franklin out streaming right now on TV. I'm trying to watch this. He's so Michael Douglas, it's hard to believe he's Benjamin Franklin. But there he is. It is true,
although I think I only watched the first episode, but I actually thought he did a decent job.
Yes.
It was, a decent job.
Yeah, I thought it was good. And then we went over to watch Ken Burns' magisterial Benjamin Franklin. Folks, look it up. And then read Gordon Wood, who's got a nodding acquaintance with the coffee shops in Providence at Brown University. I mean, Wendy, let me rip up the script here. I mean, Gordon Wood at Brown University, he is definitive on Benjamin Franklin and our founding fathers, isn't he?
He's definitive on the founding fathers and Ben Franklin, each and all of them. But if you wanted something entertaining, also there's the completed Benjamin Franklin autobiography by his great grandnephew. And it's a really good read. And Benjamin Franklin, the reason it's important for us to be watching Benjamin Franklin now is that he combined a business-friendly approach with common sense about what people were capable of and what could sway them. And he was a newspaper man. I mean, that's why he's an interesting founder for 2024.
I got 8 ways to go here. What would Ben Franklin do about our animosity to China?
Well, I mean, our animosity to China is just, it's schizophrenic. We're so reliant on China in so many ways, and China's a good political punching bag. That's just the facts of the situation because of some intellectual property theft, you could argue. And I think that given that we have a very weird relationship with Putin right now, which scares people, it's easier to talk about what we can do vis-a-vis China, versus sort of the unpredictable strongman in Putin, which we have clearly less control over.
Wendy, thank you so much. Always entertaining. We get a huge response from Professor Schiller. He is on. Paul, I'm watch it. And Michael, it's a tough task, and
Michael Douglas as Ben Franklin.
Yeah, and
where do I find that? Is that on one of your streaming services that you're subscribing to?
I don't know, Lisa, help me here. I'm going to say Apple Plus, but I could be wrong.
We'll figure it out.
I can't keep track of all the services.
There's
one I wanted to watch the other day. I go, I'm not subscribing to a new service. I mean, I just said, no way.
Yeah.
But fascinating. We'll talk more about that. I watched Shogun. It's almost over.
I know you're all in on Shogun.
You were there.
You were early on Shogun too.
Yeah, I mean, we're watching.
You were calling it out.
I'm not going to give away any. But thank you. All right, Apple TV.
There we go.
Franklin on with Mike. Maybe we'll get Michael Douglas on. We can talk to him about.
I'd rather
Franklin
as
well. We're having fun with the songs today. He's the gentleman from San Francisco, and he's from a school in New Jersey.
Oh yeah.
Yeah, Huey Lewis.
Yeah, Lawrenceville School, class of '67.
There it is.
Huey the third.
Good morning, Lawrenceville, in New Jersey.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
She is the economist from Bulgaria, Kristalina Georgieva, spearheading the IMF through the pandemic. It was such a joy to speak to her a number of months ago in Marrakesh, and now she celebrates in Washington her reappointment to another 5-year term at the International Monetary Fund. Good morning to all of you across the nation. and worldwide as well. We've got a good team led by Eric Martin in Washington at the meetings of the International Monetary Fund and the World Bank. Here's our Jonathan Farrow with the managing director.
Here in Washington, D.C.
My great pleasure.
You and I have got a lot to talk about, and hopefully we've got enough time to talk about it all. So let's start here. The biggest risk to global stability right now, is it right here in the United States? Is it U.S. policy?
Well, U.S. policy has helped the world. Let's start from there. During the pandemic, the fact that U.S. stepped up meant a lot in terms of stabilizing the world economy. And today, when we are upgrading our growth projections from 3.1 to 3.2%, to a great degree is thanks to the United States. This being said, all eyes are on the United States. One, what is going to happen with inflation and interest rates? Two, how is the U.S. going to navigate this world of more intrusive government policies?
Let's talk about the FX market to begin with. I wonder how happy the Japanese are. I wonder how happy the South Koreans are, the Malaysians, the Indians. I go through it one by one. In the FX market, as you know, Kristalina, we've got a record low for the rupee. The Malaysians have had to intervene in the FX market. The Japanese, the South Koreans are threatening to. Can you give me just a decent impression of what that's been like at the forum so far, the spring meetings? What have they said to you about that? How loud are the complaints?
Of course it is concerning. Because, as you said, when the dollar is up, many other currencies are down. Not all, but many other currencies are down. And what that leads to is concern about how long that may last. So that's what I hear from countries. How long would the Fed be stuck with higher interest rates? And when they start easing, can we expect that this would take the interest rates in the United States down a little faster? And the answer to these two questions is not an easy one. On the interest rates, the Fed is doing the right thing. They're watchful. Keep your eye on the ball. And at this point, the ball is bouncing up and down, and the Fed is not yet prepared, and rightly so, to cut. We still remain optimistic that within this year, conditions in the United States would allow the Fed to start cutting. For how fast, I don't think that we should gear up for rapid decline in interest
Can I jump in and ask you what you think the source of that optimism is? What's behind that? What leads you to believe that those interest rate cuts are coming?
Well, what we're seeing is the economy is indeed slightly overheated, but part of it comes from the fiscal stance of the United States. So there is room to cool a bit the economy just by being more watchful, and it would help the United States overall because, as we know, deficit has gone up to 7%. The second reason is that so far the business environment in the United States has not reacted very firmly to the interest rates being high, but we see a little bit of softening underneath, especially in SMEs. And that tells us that high interest rates ultimately bite.
Can I tease that out just a little bit more? Are you effectively saying to us that the US exceptionalism that so many people are talking about is ultimately unsustainable?
I didn't say that.
I'm asking.
I would tell you what are the sources of this exceptionalism, and I think they're with us to stay. One is very deep capital markets. People are coming here not only because they can generate more income with high interest rates. They're coming here because the economy is very vibrant and capital markets are deep. Second, innovation in the United States moved very quickly from idea to a venture and then to scaling up. And three, the US is tapping into a very vibrant labor force right next door. What in the eyes of many people is a problem, and I admit there are elements of this flow of people that is concerning, is actually feeding into the labor market of the United States in a way that keeps wages lower than in some other countries and keeps the ability of businesses to grow basically unlimited.
You understand why that's a difficult political message, don't you?
Of course, and I would translate it in the following way, something that I think everybody in the United States is looking for.
Yeah.
Good, sound, transparent immigration policy. The US, if you look at the sources of growth on the labor side front, it is more people coming from outside that fed this exceptionalism of the labor market. But it has to be regulated. It has to protect the American people from those who may be coming here with bad intentions.
I can tell you something that's politically popular in America and elsewhere too. It's going after China. Excess capacity and potentially dumping goods on the international market. We're not just hearing that complaint from the United States, we're hearing that complaint from others as well. What's your message for the Chinese government at these meetings with those concerns in mind?
I was in China recently, and my message there is the same I would convey today. China is on fork on the road. They can continue with their traditional policy, and that includes industrial policy on scale towards export, or they can shift gear and concentrate on domestic consumption, on beefing up demand, and on continuing with market reforms that served them well in the past. We know from experience that industrial policy often produces misallocation of capital and labor. We are today in a world of weak growth prospects. The last thing we need is more misallocation of capital and labor.
The last thing we need is exactly what we've got, I'm afraid, Kristalina, because we're seeing industrial policy take off in America. We're seeing the Europeans trying to come up with their own form of it. It might take them a while. We know how Europe works. China's been doing this for a while. What you just said about China, I heard a decade ago, you've heard for the last 2 decades, that they're going to shift this economic model. It doesn't appear that they are. I think a big question for us at these meetings, and I'd love for your input on this, I caught it with John Lipsky this morning, and I said, how does the IMF regain some relevance in this conversation to help reshape these outcomes? Because we're drifting away from free trade. We're breaking away from cooperation. We're going somewhere else.
Well, 2 responses. One, how do we, I wouldn't say regain, because I think we have quite a lot of relevance on that conversation on fragmentation and the benefits of an integrated global economy. We just have to continue to bring the facts in objective manner. And the facts are that when we go excessively in protectionism, in industrial policy measures, we risk to actually affect negatively prospects for growth, and we certainly create a wave, a down spiral, because experience tells us every measure of protectionist nature has 75% probability of reciprocity. And then where do we end? But the second point I want to make, and I'm making it most sincerely, we are in a world that is faced with massive transformation, the digital transformation, the clean economy that we aspire for. There is some value in using industrial policy to accelerate decarbonization, to make it so that the benefits of the digital economy are more fairly shared across society. In other words, when there is a market failure, yes, it is justified. You take a measure to correct it. Our worry is that when we looked at the massive increase of industrial policy measures, a good chunk of them do not reflect the market failure. So we will continue to speak truth to power.
Let's talk truth to power right now. We've got some spies around here. They know they saw you with the central bank governor of China yesterday evening. Can you tell me what you said to him?
What I told him is twofold. One is that China needs to continue to seriously address the problems of the property sector that have been handled somewhat but not resolved. They need it for domestic consumer confidence, because many Chinese people think of their apartment as their saving for old age. They also need it because a sector of that significance cannot be put on hold. The second thing I told him is that we are now starting our Article 4 consultation. This is our annual taking the pulse of each economy with China, and that it may be very useful for China if we do more analysis on how they can boost domestic demand, how they can exercise their own decision for a dual circulation economy. Yep. And I was delighted that he sees value from the fund to get deeper in these issues and provide China with appropriate advice.
They're coming under pressure, you know, they are politically, not just from this administration, Secretary Yellen, but potentially another Trump administration as well. Mm-hmm. Do you have any concerns that they'll lean towards the FX market and just seek out a weaker currency?
Well, we haven't seen signs of that. But what I do believe is that yes, if China builds overcapacity and pushes export that create reciprocity of action, and then we are in a world of more fragmentation, not less, that ultimately is not good for China. China wants an integrated global economy. Therefore, what I want to see China doing is to get serious about reforms, get serious about demand and domestic consumption.
We've got so much to talk about, but unfortunately, I know you've got other things to do. Let's continue this conversation through the year. Kristalina, thank you so much, and congratulations on a new term.
Thank you.
Jonathan Ferro, with Kristalina Georgieva newly reappointed to the IMF of a 5-year term. And, you know, always there's some, even with Lagarde, who was iconic, there's always challenges about will they get reappointed and the different constituencies of that. And particularly in Europe. And all in all, what codified a huge thrust to say Georgieva again was her performance during the pandemic. That's really what solved that, talked about that as well. Jonathan Ferro there with the managing director on China. Paul and I are going to focus on, I believe, one war, or maybe it's 2 wars. I don't think there's 3 wars out there. I shouldn't make a joke. It's tragic. But boy, do we have a guest to follow, Kristalina Georgieva, to talk about the uncertainties we have about our geopolitics. Dan Tannenbaum will be joining us here from Oliver Wyman in a moment. Futures up 13, Dow futures up 123. Good claims data today showing an employed America. From New York City, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got green on the screen after yesterday's sell-off. Right now we have NASDAQ futures up 0.1%, Dow futures up 0.3%, S&P futures up 0.2%, or 11 points. Over to the bond market, the 2-year yield at 4.95%. That's up 2 basis points. The 10-year yield at 4.61%, and that's up about 1 basis point. We'll take you over to tech right now. Micron, they're up 1%. Sources saying it's going to get $6.1 billion in U.S. government grants next week. And over to Microsoft, they're up 0.1%. Business Insider reporting the company wants to accumulate 1.8 million AI chips by the end of this year, primarily from NVIDIA. NVIDIA shares are higher too. Now, Infosys, they're lower. They're down 5%. Reported net income for the fourth quarter, though, that beat estimates. But its ADRs are down this morning. That is your Bloomberg Business Flash. Tom and Paul.
Elisa, thanks so much. As we have a conversation with Kristalina Georgieva, the IMF, and I believe scheduled tomorrow, Gita Gopinath will be, I believe, with Lisa Abramowitz. Look for that tomorrow. We continue this conversation on our geopolitics and American policy with Daniel Tannenbaum. He is at Oliver Wyman. He is definitive on sanctions. And yes, he's at the IMF World Bank spring meetings and joins us from our facilities in Washington, D.C. Dan Tannenbaum, I've got to look to the sort of kind of like war we're prosecuting. Max Hastings has written a 1-volume on Vietnam, which over 900 pages makes clear every step of the way it was a sort of kind of like war. Why are we prosecuting sort of kind of like sanctions against Mr. Putin?
Well, thanks, Tom. I think the sanctions on Putin for the last 2 years, and we've talked about it repeatedly, have been complicated by the fact that Russia is still an active part of the global economy in that it's still selling oil to Western countries. It's still selling a whole load of commodities and other natural resources, although that's beginning to get wound down. I think the challenge that we're seeing is when I talk to firms and clients around the world, I don't think they're as afraid of the U.S.'s sanctions might as they once were when fines totaled into the billions of dollars. I think that's giving firms almost a choice of thinking of whether they continue to do business in Russia where it's legal or following kind of the practice and what's behind the sanctions against Russia thus far.
I mean, this, Paul, to me is the heart of the matter. Does sanctions work? I mean, that's all there is to it.
Let's go right there, Dan. I mean, in this new world, or in this current world of globalism, do sanctions work? Because I'm thinking about whether it's Russia, whether it's Iran with their oil, it just feels like they don't really work.
So sanctions work. I think the question to ask is what is encompassed when you talk about sanctions. And I think you can't avoid the discussion about enforcement. And enforcement, unfortunately, has become a lot more limited than it once had at scale. And that enforcement is really what helped companies and countries fall in line and begin to make choices. When you don't have that stick, unfortunately, it's really harder to see the full effectiveness of sanctions. So when I see Secretary Yellen talking about we're going to impose new sanctions related to Iran after the missile strike and drone strike last weekend in Israel, enforce the existing sanctions. I mean, there's real questions there. If you don't enforce sanctions, you're not benefiting from the full effectiveness.
And in terms of enforcement, I'm not sure who really enforces them. If Russia can sell oil to India, who then refines it and sells it to a gas station in New Jersey, that's not working. So how do you really beef up enforcement then?
I think the challenge when you move away from specifically commodities that we know certain Western countries and allies of the U.S. and the broader Western regime rely on, when you look more broadly, there's certain activities that you're really looking to avoid as a starting point. Anything that goes in furtherance of supporting Russia's war in Ukraine. Any companies any companies outside the U.S. that are known to be supporting Russia and still trading with the West. Those are the companies to begin to really restrict. We know there's larger Western companies continuing to operate in Russia. Where that line of legality is can certainly be called into question because Russia's gone to great lengths to mask certain involvement of entities. So I do think there is a question in terms of what do we still need from Russia and having an above-board debate as there is still trade that's happening.
What are you learning at the meetings in Washington? I guess it's sort of kind of early. Thursday morning, 9:21 a.m. You know, nobody, I mean, Dan Tannenbaum's the only one that's awake.
Exactly.
With the managing director. Everybody else starts the day at 11 a.m.
Sure.
But Dan Tannenbaum, what do you think the theme is or the tone at the meetings in Washington?
I think it depends on who you ask. When I talk to government officials, they're certainly concerned of broader geopolitical tensions and what role their country plays, especially if their country is being forced to choose. When I talk with private sector entities and clients, I think they're looking for some sort of rules of the road on the potential weaponizing of an economy. The U.S. Deputy National Security Advisor Dileep Singh was writing about an economic statecraft doctrine, but the private sector will follow whatever the prevailing rules of the road are. But I think they want clarity that we're not going to see a continued weaponization of economies.
What is your prediction for China and our relationship in January of 2025 after we see whomever is president? I mean, based on the articles of the last number of days, I don't think it really matters. They're both on the same page. Witness win Pennsylvania. So one of them is going to win Pennsylvania, and then we have a new China policy. What's it going to be, Daniel Tannenbaum?
I mean, as a son of Pennsylvania, even though I'm in the eastern part of the state, I do take this seriously. Look, I think the Biden administration has largely followed the practices of the Trump administration with respect to China, albeit obviously with a little less of the colorful rhetoric that dominated the prior administration. You're not really seeing much of a policy change. I think the interesting thing, especially when you begin to talk about Iran sanctions and Iran oil sanctions, China has been the beneficiary of Iranian oil for years. There haven't been meaningful enforcement of sanctions on Chinese entities with respect to that trade that would be on the wrong side of U.S. secondary sanctions. So I think if there's a détente, there's an understanding of China not coming against U.S. and other Western interests, giving up essentially enforcement of U.S. sanctions in return.
Dan, we got time for one last question. And I know the Oliver Wyman Madison Square Garden tickets.
Oh, yeah.
They're awesome. What do you think, Dan? Sixers, Knicks? I mean, is this like original six in the NHL? This is just, the Sixers are back, Dan Tannenbaum.
The Sixers are back. I still don't know what to make of it, but I'm looking forward to seeing some games in New York.
We'll have to see. I think he's inviting you.
We'll get the box.
Dan Tannenbaum, thank you so much. With Oliver Wyman, a gentleman of Philadelphia as well. These are huge, huge issues. And, you know, Kristalina Georgieva touched upon them. And I think what so many of our listeners and viewers are saying, and I see it out on live chat, is, well, it's sort of kind of like sanctions. Like, you know, there's some great shots. Robin Brooks has been great on this, I believe, at Brookings. Paul, instead of the stuff going to Russia, it's going to Kazakhstan, and then it goes to Russia.
Yeah.
What's the difference? I mean, I don't get it. I mean, it's like pretend.
It does. I mean, again, as Dan was just mentioning, the sanctions on commodities, tough to enforce. And so you wonder kind of what is really the value. And maybe some sanctions on individuals has a bigger issue. All I know is the U.S. government owns a bunch of yachts around the world stuck in ports. I'm not sure what that's
there's
really doing.
that as well. It's like, what do you do with all the stuff we pulled in from Russia? I know that's a heated debate. Our team, Balance of Power, we'll have more on that today with Mr. Johnson. I believe it's a Saturday vote.
Yes.
It's after the China, it's after the qualies in China for Formula One.
Okay.
And it's before Knicks Sixers.
Okay.
Rich, is the Knicks Sixers Saturday or Sunday?
Saturday
at 6 is Knicks. I haven't been as excited about a basketball game in ages.
Well, Jalen Brunson has just reinvigorated this entire franchise, so we're fortunate to have him. And without Julius Randle, we'll see how far we can go.
Futures up 11 Dow, futures up 122. Let me give you those levels. 5,073 on SPX. And the Dow, just over 38,000, 38,113 as well. We do economics, finance, investment, and international relations. Thank you, John Farrow, for that conversation with Kristalina Georgieva. We're on YouTube. Search Bloomberg Podcast. It's a very live chat. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Blue button from the Bloomberg Interactive Broker Studio. I'm Lisa Mateo alongside Tom Keene.
Some training, please.
Sweeney with your opening bell report. So how are the markets going to react? We had the latest round of Fed speak, also some more economic data coming in. No change in the labor market from the latest round of weekly jobless claims. 212,000 applications were filed last week. Also, the Philadelphia Fed's Business Outlook Index, that came in stronger than expected this month at 15.5. And in about a half hour from now, we get existing home sales. And we're off and running, so let's get right to it. The S&P 500 up 0.2%, the Dow up 0.3%, and the NASDAQ up 0.1%. Over to the two-year yield at 4.95%. That's up up 2 basis points, a 10-year yield at 4.61%, and that's up 1 basis point. To currencies we'll go. We have the dollar is stronger, Japanese yen, euro weaker, British pound stronger, Bitcoin up 2% at 62,377. As far as commodities, we have spot gold higher at $2,390 an ounce. Brent crude, $87 a barrel. At the open, we also want to check in with Taiwan Semiconductor. Their shares down 5%, even though it delivered a better than expected revenue outlook, also reaffirmed its spending plans for this year. That is your Bloomberg opening bell report. Tom and Paul.
Oh, get out the calendar. Red Sox are in last place. I mean, that's what it comes down to. Oh, pretty much. They're playing 500 ball, but they're others playing better.
Others playing better, yeah.
Dreaded New York Yankees. Yep. This is a joy. What happens, folks, is if you're managing money and you get past $1 trillion, your mind changes, your brain changes. And only Chris Ailman is grounded. He's with the California State Teachers Retirement System. We're thrilled he could join us in studio. How much do you manage this week? I mean,
Tom, come on, $330 billion.
Okay, $330 billion. And he's grounded. And what I love about him, at the back end of his note, and he's right on tune with the calendar, sell in May and go away. Really? Do you feel that?
The old adages, and we all three understand the old adages, no shot there, but still are in play. And I really wonder, Tom, I mean, the market has come up so much this year. It's nuts.
Okay. Jason Furman, out with a great endowment view. He's got like 20, 30 colleges, and they're all doing single-digit return. Even the best ones, I'm barely doing double-digit return. Do you manage for total return for the best outcome you can get, or do you manage to an actuarial assumption of 7 or 8%?
Actuarial assumption. And so we're different, and that's why our asset allocation is different than the endowments. Number one, I can't go out and hit you up for a big contribution just to help boost my fund.
Lisa can.
Yeah, well, and we generally are looking at trying to make that 7 as a pace per mile in a marathon. It is literally a 30-year outlook for us because teachers live so long. So I use fixed income where they don't. I have only 50% in privates, only 50. Well, they can be up to 80 because they can handle illiquidity.
So what is the asset allocation of the state of California these days? And maybe how has it changed?
Yeah, well, the state of California, you and I bought a lot of municipal bonds.
Yep.
They're in an interesting position. But in terms of CalSTRS, we're still pretty close to our long-term 70-30, roughly,
okay.
80-20 kind of asset allocation. Got about 45% in fixed or in equities. We've got 15 in private equity, 15 in real estate. Those haven't moved just because those markets are frozen. We're about 12 in fixed income, but fixed income's hiding in other parts of the portfolio. We have inflation sensitive at 7, and then another asset category that's fairly new called risk mitigating strategies. It's about 8%, almost 10%.
A risk mitigating strategy is when you yell down the hallway, empty the dishwasher. And the child does. That's a risk mitigating strategy.
Exactly. Chris, what do you make of this market? I think a lot of folks, when they look at the equity markets, I mean, we had this big run off of those lows in October. Earnings are good, but are they that good to support this market? How do you feel about just kind of where we are in this market here?
I am surprised. I'm going around New York this week talking to my private equity partners, and they are telling me that business is so strong. Every airport I went through was absolutely packed. Every plane was packed.
Yep.
Every restaurant in New York. I can't believe how busy Manhattan is. It's not true in San Francisco, not true on the West Coast, but streets are busy again. So the economy is strong. The earnings are real.
Paul's led on this. Why? Ken Griffin's building a new tower south of the Diamond Tower. We got the Diamond Tower, we got the Ken Griffin Tower. New York seems to have a pop to it. I get it. And that other geographies, not just San Francisco, but smaller cities as well, they're basically flat on their back. Is it work from home? Why?
It is work from home, Tom, and it's changing the nature. When I talk to, not surprising, private equity wants people back 4 days and really wink, wink, 5 days.
No.
On the West Coast, that's not true at all. We're
wink,
2 days a week. And they really push back on even 4 days a week. Wow. Look at tech. So I think the thing that shocks me about this market, and you guys talk about it a lot, the market was looking for 6 cuts just 4 months ago. Now they're talking about maybe 1, and if anything, a rate hike, and it's taken it in stride. So I think it's strong earnings. It's the base of the market, and then it's all this change in AI. That AI whether it's the steam engine, maybe the light bulb, but AI is transformational, and they're betting the farm on it.
Yeah, that's kind of what I hear. So, all right, we're kind of getting right into the teeth of the earnings season here. Chris, what are you looking for? What do you think the market needs to see? Do we need to see earnings estimates go higher to support this market? Do we just need to see nobody blowing up? What do you think we need to see?
I think nobody blowing up. And, earnings are a game now. Come on.
Yeah.
How come every quarter all the companies beat their earnings estimates? Because it's gamed. And we need to stop looking past earnings. We need to really look at the P/E ratio is still reasonable, not priced to perfection like I thought it was at the start of the year. The E has come back up to match the price. So we're okay. Is the market got more upside? That's why I think Tom, sell in May and go away. This is an election year.
Are you getting pressure from Karen or William? These are the first names of the board members at CalSTRS. Fiona. Fiona's trouble. She's in the meeting. She's just impossible. Harry is a board chair, K through 12 classroom teacher. Are they pounding the table and saying, why don't you own some of these tech darlings of California? Are they just screaming at you, own more of the big boys?
Right now, Tom, they're all pounding the table and waving goodbye because I'm retiring in about 60 days.
I was going to say,
but they're great
I was just
people.
about to ask him. I thought he was on this. Is this a retirement tour? Is this like the?
He's been on a retirement tour for 3 years.
Tom,
I didn't
stop.
bring it up.
Hey, you're one to talk, Tom. Come on.
Thank you.
So, but no, realistically, they're salt of the earth people, and they are not worried. They're worried about the overexposure to tech because tech just isn't in our equity portfolio. It's in our private equity portfolio. It's even in our real estate portfolio, in our infrastructure portfolio. When you look at the energy demand on tech, so they're not worried. What they're worried about is this year's a good year. Let's try to get to 7. Let's balance the portfolio. Let's have diversification is still the name of the game for us. We've got to be balanced. So it's not just put the metal to the floor. Let's have a steady 7 over time. And yes, they are very focused on that.
The cheap shot idea is everybody's leaving California. Paul's living this in real time. He's got kids prospering out there. And I hear a lot of people with a terrific buzz about Los Angeles. Ed Ludlow's really big on a recovering San Francisco. Things are healing. And all that. Push against the gloom on the great state of California. What's California doing in the future to stabilize their many political, social issues?
Well, I think that's part of the challenge for the state. I'm not a political guy. I'm a father, and I've got 3 daughters that are in their early 30s. Buying a home is really, really difficult. So just like anywhere in a nice state with great weather, home affordability is a huge problem. Water, we have plenty of it this year, but water is going to be a long-term problem. And I think just like a lot of places in our country, politics really takes a lot of work. We need people in the middle who will talk. And I'm just looking at that. My association's here with New York and with London. I want to care about the financial markets, Tom, but California still in the West Coast is still going to thrive.
Awesome.
It is the home of innovation, and you're going to see massive changes in what we do and how we operate in the next 5 years.
I'll get one more in here, but I just want to compare and contrast. At the Rochester Institute of Technology in February, you get up and you have to walk the quarter mile, which is basically like an ice station zebra when you're at the top of the Arctic. He's getting up at Santa Barbara going, oh, what'll I do
Another
today?
75-degree day.
Oh,
I wish.
terrible.
No, I'm in Sacramento, but
one of the greatest things, arguably, about the state of California is a university system.
Exactly.
And it's just extraordinary. Up and down the state, just extraordinary. How is the university system these days in California?
No, it's doing excellent.
Yeah.
It is amazing.
Awesome.
And you got to throw in there, you've still got Stanford.
You've
got
my son goes to Santa Clara.
There you go, Santa Clara. You've got Cal Poly and Cal Poly San Luis Obispo. You've got an amazing system. So I think I can't emphasize enough, because I get it about education.
Well,
You've got to invest in education and focus on education for the younger workforce, and that's what's needed in America.
Chris, you're retiring in 60 days, right? 24 years at CalSTRS. Before that, at Washington State Pension. You've done it all. You've seen it all. Heck of a run there, my friend.
Thank you. It's been a marathon. It has been a roller coaster ride, and I'm not getting off. I'm going to stay in the business, and I'll stay active, but it's time to get out of government and do some other things.
Chris Ailman, thank you so much with CalSTRS here this morning on making that actuarial assumption, which most of us aren't fortunate enough to do. It's a whole thing we can devote to, is to the retirement shortfall, if you will, of America coming off of ERISA of 1974. It's been painful. for many, many Americans. Red and green on the screen, the VIX 18.33. With our news in New York City, here's John Tucker.
Well, Tom, he's back at the courthouse in Lower Manhattan. The hush money trial against Donald Trump resumes with jury selection this morning. And Bloomberg's June Grasso has more in this report.
The trial judge has set aside 2 weeks for jury selection, but that much time may not be needed. 7 jurors were sworn in on Tuesday, so that means 5 more jurors and 6 alternates still need to be selected. The jurors who survived the grilling by lawyers are an information technology worker, an English teacher, an oncology nurse, a sales professional, a software engineer, and, in a bit of a surprise, 2 lawyers. In New York, June Grasso, Bloomberg Radio.
Ukraine says it attacked a large air base in Russian-occupied Crimea today, highlighting its ability to strike the Kremlin's military installations far beyond the front lines, despite growing ammunition shortages there. And President Biden talking tougher about China as he highlights the challenges to its economy.
They've got a population that is more people in retirement than working. They're not importing any. They're not bringing. They're xenophobic. Nobody coming in. They've got real problems. I'm not looking for a fight with China. I'm looking for competition, but fair competition.
Well, the president's latest rhetoric comes 2 weeks after his latest phone call with the Chinese President Xi Jinping. The World Health Organization is wading into the world of AI to provide basic health information through a human-like avatar. But while the bot responds sympathetically to users' facial expressions, it doesn't always know what it's talking about. Sarah is a virtual health worker that's available 24/7 in 8 different languages, but WHO is warning on its website that this is an early prototype and it's providing responses that may not always be accurate. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul, Tom, and Lisa.
Surveillance correction. Big correction. I thought the Red Sox 500 ball. I'm wrong. 10-9.
10-9.
526
okay.
ball. Still enjoying last place. But, we have to do
our days. Competitive.
I got to do it. Yeah, you get the Yankees in first place, 684. 1 game
nice win last night.
Back as the Baltimore Orioles.
The O's.
We've been looking. I watched some Orioles baseball.
We know the ownership there, don't we?
Yeah, that's a rumor. I think Mateo's.
Okay. She's probably in the group. Yep, she's in the group.
She's in the group. Kel Ripken's in the group. That's a good thing. But the Orioles start out strong, home top in the league, 8-4 at home with the surprise Cleveland Guardians. This is
who?
The Guardians. I'm getting used to it now.
I'm not.
It's not the Cleveland Indians.
No,
it's
Cleveland.
the
What?
Cleveland Guardians.
Not the Indians.
Not the Indians.
So,
what was wrong with
even better, Bar's out this week. We've been Detroit Tiger free, which
yes,
is a good and beautiful
goodness.
thing.
Yep.
Yeah. Well, Micah Bar's scheduled, I believe, on Monday.
Is he back? Okay. Well,
yeah, I talked to one of his people in the hallway.
He's probably cruising, I'm guessing, this week.
He is. It's a 3-island tour.
Good.
Dow up 141 points. Nice lift to the Dow. Everything else pretty much flat. SPX flat here. What are we doing? I'm not going to kid. We're into earnings season. The lead today, Taiwan Semiconductor out with a very, very nice earnings lift. We're on Apple CarPlay. We're on YouTube, the live chat. Search Bloomberg Podcasts. Good morning.
headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen. The Nasdaq down 0.2%, the S&P 500 little change, and the Dow up 0.2%. The 2-year yield at 4.98%, up 4 basis points. The 10-year yield at 4.62%, up 3 basis points. To commodities, we'll start with spot gold. That's higher at $2,379 an ounce. COMEX gold at $2,394 an ounce. And over to oil, we have Brent crude $87 a barrel, NYMEX crude $82 a barrel. To earnings we go. We'll start with Alaska Air. They're rebounding from its Boeing MAX issues. The carrier expects second quarter profits to top analyst estimates. So we have Alaska Air up nearly 2%, Boeing down a fraction. And Netflix, they report later this afternoon the shares have actually been on a roll the past 6 months, adding $112 billion in value thanks to password crackdown and also its new ad-supported subscription tier. Netflix shares down 0.5%. That is your Bloomberg Business Flash. Tom and Paul.
Thank you so much, Lisa. Greatly appreciate it. This is one of my best people at Bloomberg. Eric Martin has been doing this since time began, and he is so valuable. He's been covering the IMF and World Bank. He was at the Bretton Woods conference.
No kidding.
In New Hampshire with John Maynard Keynes.
Sure.
Right after World War II.
I understand that.
Joining us, the smartest guy in the block on these institutions, these international institutions, Eric Martin. Eric, let me just start with the age-old American question. Are they going to ask the American taxpayer for more money?
Tom, they actually, with the quota reform that we have in Marrakesh, Morocco, announced 6 months ago, the resources of the fund are in a good place for now, I think, is the feeling among the membership. And so in contrast to the World Bank, which is across the street from me here, I've got the IMF in back of me. And the IMF is in a good place in terms of its resources. But certainly eyes are on the U.S. and the U.S. economy.
Are they in a good place in dealing with problematic crisis economies? That's why they were invented after World War II. What have you learned in your study of, say, their fractious relationship with Argentina?
Sure. Well, Tom, it's funny you should mention it. I actually brought with me for these meetings, I don't know if you can see this, these are my presidential mints from the Mount Washington Hotel in New Hampshire. So very on point with your discussion of Bretton Woods conference. This is the 80th anniversary. There are questions about, is the IMF still fit for purpose? And
Oh, I think we're frozen there. Are we frozen there? Let it go.
It's Washington, D.C.
Eric Martin out on the sidewalk at the IMF buildings. We'll try to get him back. We've lost the audio there, and he's showing us the cards right now of his tokens. Let's talk a little bit about this. There's this, into the political election, Georgiev was in a box, and I thought John Farrell's questions to her on China were really timely, in that what so much of this is about is a political election. Joe Biden and Donald Trump have to change their tune because of one state, Pennsylvania. That's the swing state of the swing states. And you see that with the issue over Japanese buying U.S. steel. You see that over China. But then we also have to do a relationship with these international institutions, including the G20 meetings.
Well, I think that's a great
about China.
It's a great point, Tom, because you and I grew up in an age where in business that it was all about internationalism and the global economy and global interdependence. But that seems to have changed over the last 5, 6, 7 years, whether it's here in the U.S. or in the UK with Brexit. More nationalism.
One more try here with Eric Martin down in Washington. Eric, where is the sense of globalization, the spirit that you cover each and every day? Is globalization dead?
Certainly globalization is not dead. In fact, I'm seeing over here on my left, Madame Christine Lagarde is out here greeting some fans.
Well, can you bring her over to you? Can we have a conversation with my good friend? Oh, he just froze. Okay. The reason, that's Lagarde's people freezing the feed because they know I'm going to ask for Christine Lagarde to come over and have a few words with Tom Keene. But that didn't work out. We're going down in flames here. I want to rip up the script here right now, Paul. We got to come back to the beginning conversations this morning on this equity market. And any number of these conversations, I don't hear anybody saying go to cash.
No,
I don't. The whole bear market cash thing, after getting hammered since October of last year, has really stepped aside.
It has. And Tom, we talk about the drawdowns in the market. We have actually almost a 4% drawdown here, Tom. So, I mean, this is, I don't know where people are going to go here. A little bit of a drawdown from that recent high of the market, but that seems to be it. I mean, we'll have to see whether we have some more downside here. But this is, earnings are coming really into focus. Again, Netflix after the close today will be one of those, I'm not going to call it a bellwether stock, but it's certainly a widely held, high-profile stock. It's up 25% year to date. And we'll see how, it's a call on consumer a little bit, whether you're cutting the cord.
He was scheduled to be with us today. Peter Lynch, he's got something to do with Boston College and a small investment shop up in Boston. But Bespoke, thank you so much for this tweet. Paul, let me quote it in its entirety. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves.
That's a good point.
And that's Peter Lynch, of course, iconic. Bespoke, thank you for that really smart remembrance there of a time and place far away. Can you imagine what the emotion would be like if we actually draw down 11%?
11, 12. Yeah, exactly right.
Can you imagine? People would be hysterical.
It would be hysterical. We just haven't seen it. Again, a lot of folks are saying you look at this market up 25% or so from that October low, maybe 21, 22% now, so it's a little bit of a pullback. But we really haven't seen a sustained pullback in the market, which a lot of market technicians will tell you is healthy for the market. Haven't seen it. But again, the Fed, we kind of know where they're going to be. They're going to be a little bit higher for longer, and now we'll focus on earnings.
Can't say enough about the social effort, folks. We're out on LinkedIn primarily and YouTube. Lisa Mateo adding some real
big
value
social
there.
presence.
She's just huge. I mean, I'm trying to keep up.
Yep.
But the basic idea here is this world is changing, and we don't take that over to conventional equity analysis. Lisa, Michael Barr, Paul Sweeney, and I know that like the whole distribution of media, it's changing. Do we understand the equity world's changing? And most of that to the optimists seems to be productivity from technology.
Yeah. And
that's foundational.
And, we get some smart people on here, Tom, that tell us that this AI thing is not only real, but it's transformational. I go back into Gene Munster. I mean, Gene Munster is as good a voice out there on technology as I think there is. And he said, listen, on a scale of 1 to 100, this is darn near 100. Like electricity type impact.
Yeah.
Putting the internet at 40 or 50, putting AI in the high 90s in terms of the impact on a relative scale basis. And then we get some more fund managers are saying it's a big part of this market. It's a big part of the future. And it's not just technology, it's impacting all parts of the
look
economy.
at it as, and this goes to Wendy Schiller's conversation today, is some of these big shifts, the first time they go, they fail.
Yep.
Or they do not that. They're suboptimal, I guess is how I'd put it. And maybe even the second time they go, they fail. And then the third time, boom. And I don't know where the boom is on AI.
Yeah.
My guess is it's farther out than we think, but that's just my amateur opinion.
Yeah.
But what we need to talk to people. I mean, that's why are we getting Ed Ludlow tomorrow? Is he awake yet? I mean,
He's still charging
Are we getting Ed Ludlow tomorrow?
Tesla. He's
You're
charging
efforting. We're efforting. It's a tough get. I mean, you got to go through. He's got to get signed off by his agent.
Yep.
After the people decide if Ludlow can open up some of his time.
Well, since he went West Coast,
7-8
and
minutes.
since he went electric, he's been tough to deal with.
There's there's no question about that. This afternoon, Mr. Tavanovich, Ms. Masser, you're going to have to listen on Bloomberg Radio to a really, really important moment. Netflix earnings. To me, it's like Microsoft and the rest. I changed my tune on that. It's huge. Paul, what do we expect from Netflix?
Could be a big quarter for them. As Lisa's been reporting, they're going to report after the close. And the revenue drivers in the intermediate term are cutting down on all that password sharing. That's a big revenue impact. And then advertising. That's a big revenue driver for the company. So it's historically been a subscriber growth story. That's still the case, but now they got some additional revenue sources.
Rich from Victoriaville emails in and says, I was thinking Quebec Nordiques. I'm sorry.
Okay.
Tim Stenovic, of course, and Carol Masser. Look for that this afternoon with coverage on Netflix. We've had fun today with a gentleman from Lawrenceville, Huey Lewis, Paul Sweeney, Alex Steele next.